Welcome everybody to our 8th episode of Markets Parlay, in which we just check stocks that we want to own. I mean, basically we're trying to build, as you can see in the title, a $10,000 portfolio. Probably end up being a $20,000, but for now we're gonna go with 10. And basically we've been gathering some names for some of you that have been following. And if not, you can go to previous episodes to see how we got around to getting these names. So these are the ones that we have a first interest in. We might add more. We've been adding some more at some points, and we might take some out. We already did take some of them out. We are ignoring the utility sector because we think it's kind of pointless, because basically, pointless in the sense that we're just investing in government in different states because they're government monopolies in the different states. So we just would have to do an analysis of the energy consumption in those areas. So I guess we're just not interested in that, even though they're probably attractive given the current setup. Anyway, we're usually joined by my brother here, Evan, but he's a bit late, so he'll be joining us in a bit. And yeah, so just to recap on some stuff. For example, so there was one stock that we've been talking about recently called Calm. Well, Calm is the ticker. It's Calm Maine, and it's a largest egg producer, I think, in the world, and definitely in the United States. Oh wait. And we, I mean, you know, we really liked it. There was a bit of a like we didn't analyze it well, like we must admit. I'll admit it. And it's the fact that because you see this PE, right? So we're like, oh, okay, 3 PE, and they had a good cash balance. The dividend, we figured that this dividend yield doesn't really matter because they basically give a third of their income. But still, we were like, this is a 3 PE. This is insane. Why? Like, why is the stock being so down? You know, it's like people have been selling even though they've been having crazy revenue growth, and their income was expanding, their margins, so everything looked great, right? And the thing why people were selling it is because if we look at the egg prices, right? Let me see here. So yeah, this is what we kind of came about, because I was like, oh, I really like the stock, so I bought into earnings. I mean, I was doing this analysis anyway, so I figured this out before I bought into it, but still, like, you know, I could have been more cautious, I think. So I think it's gonna turn out all right, but I should have been more cautious because I was much more optimistic than I should have been. Anyway, so because of the price of the eggs rose, because, well, inflation, I guess, but mainly it's supply constraints due to there was an avian flu, right? And these people being the largest, they were able to adapt better than the competitors. So a lot of smaller producers were not able to adapt the same way. I keep looking at the screen instead of you guys, my bad. And so they were able to capture a lot of the market and be able to, you know, raise their prices. As a matter of fact, they were sued by some people, especially the Texas government sued them for price gouging, right? And they actually just recently settled the suit, which has been good for the stock price. But whatever the point or whatever the case, what I'm trying to illustrate here is the fact that even though this looked attractive, the reason why it was so low is because the analysts and the investors were already looking forward to these earnings being depressed. So this PE already is not reflecting the reality of things, because already in the quarter that they just reported, their earnings are much lower because the revenue is much lower. So let's see, for example, let me see. Well, for example, I mean, we just look at it. So the PE, and this is what happens many times, and this is kind of what you gotta guard yourself against when you're doing value investing, right? Why are multiples depressed? Multiples are depressed the same reason multiples are expanding. And you're like, why is this stock at 60, 70 PE? How would that be justifiable? Well, the reason is because they believe revenue will be growing in the future and earnings, so that if they catch up to that multiple, so they're like, oh, we're paying 50 for 50 times current earnings, but the earnings are gonna grow so much that basically I'm paying 10 for future earnings or next year's, right? So maybe, I mean, some of them are that dramatic, like for example, Nvidia, right? I mean, I don't know anymore, like whether it's justifiable or not, those high P, the same way, like that's why high multiples for Palantir, high multiples for Tesla, right? It's because investors are expecting a huge upgrowth in earnings. So in the same way, when we see a stock, I guess I was checking this one out. When we see a stock that has really low PE, we gotta worry about that. It's like the analysts and the investors are saying the earnings are gonna depress, and they did. Now the question is, did they do enough to justify such a low PE, right? So then if we normalize the PE with the earnings that I think they're going to end up doing for the year, which is about 500 million, they might actually do lower, but that would be a 7 AP, right? Let's say that they do even lower, right? That would be a 10 something 12 PE. So that still, in my opinion, is safe enough of a bet. And they could surprise on the upside because it all depends on the price of the X, right? So unless the price of the X really tanks, which doesn't, I mean, being below $2 a dozen, which again, I'm not an expert in any of this, but again, it's pretty depressed. I think it's a safe enough bet, but I could have been more cautious in the idea of getting into it too soon. I was just very attracted by it, the idea of getting into earnings. So and where I'm trying to get to with this. Earnings, as you can see here, they missed on revenue, which I expected. I already expected they miss on revenue, and I expected them to either even miss on earnings or not. But I was like, oh, but they're cheap enough that people will buy it now. The thing with this is, which I didn't realize at first actually, is I thought they were expanding margins to some extent, even on a quarter-over-quarter basis, which is the way to look at stocks like this, because on a year-over-year Forex, it's not like year-over-year you look, I think, in my opinion, more stocks that are cyclical, right? So it's like that's why you compare the quarter four with the quarter four, because you're saying in the quarter four they usually sign this deal. So some, if it's like, for example, a retailer, right? It's like, oh, there's more people that buy Christmas presents in the quarter four. Things happen different, but things like eggs, right, on commodities to that respect, everybody buys them at the same amount pretty much all year round. So what you care about is the quarter over quarter more. I mean, although you still care about the growth year over year, because that's where you see the reflection of the change in prices, right? Anyway, this change in earnings and stuff, not only, so they are losing some money. Now, there are things, which is what I found interesting too about the stocks, that they are expanding and growing their higher margin products, like specialty eggs, like organic eggs, or organic eggs, or like farm raised. That's what they mean with specialty eggs, right? So they are growing that significantly, and they've also growing significantly their prepared foods. They acquired a company recently, and they have a lot of cash. They're the largest producer. Like, they'll be fine. It's just like probably this is not going to return a lot, but we know it could surprise on the upside. So I'm probably going to reduce my position that I have now, which is large enough, because the way I entered it is by a way of selling puts. Evan, when he joins us, could explain a little bit more of how that works. But basically, when you sell a put, you are selling the right to somebody else. So for somebody else to have the right to sell you a stock at a certain price, that gives you, since you're selling it, that puts you in the duty or the obligation to buy a stock at a certain price. So the way that's convenient in some cases is that you are getting paid for selling that contract. You are getting paid to provide somebody with the right to sell you at a certain price, right? So what did I do? I decided, okay, the stock is so before earnings, right? A month ago, right? Something, right? So the stock was what did we put earnings on January 6th, right? So on January 6th, which should be about here, right? Getting to earnings, they were about 78, 79, around 80 almost, right? So then I'm like, okay, I'm gonna sell a contract that I promise that I will buy the stock at 80, because I'm like, oh, earnings, I think even if they miss revenue on earnings, the stock will go up because it's so cheap, right? Well, I was clearly wrong about that, but the point is, I sell the contract, right? I make money out of that, and then I'm like, okay, I don't mind owning the stock at 80. So if the stock price does go down and somebody exercises the right, so forces me to buy the contract, I'm okay with that, because I'll buy the stock. The problem, kind of the thing is, like, because I'm playing with such low amount of money, like 10,000, 20,000, I only sold one contract because that already forced me to buy 100 shares. I know that was already more than I wanted to buy, but I was like, okay, I'm fine. I can always offload the shares later because I think it's a safe bet. So I haven't lost money because the stock has recovered since then, but at the moment, after earnings it tanked and then it continued to go down to this low 72, right? Because of the fact that I made money selling the contract, my cost was not 80, because I did get exercise and somebody forced me to buy the 100 shares at $80. But because I made money from the contract, my cost ends up being lower. Now, that being said, now because I'm here, the stock has recovered because they settled the suit with the Texas government. They basically given them, I think, 2 million X, something like that. Yeah, here it is. So they've donated 2 million X as a way to and that's actually a great way to settle the suit, now that I think about it, because if we speak a little bit, I don't want to get too deep into this, but I guess it's because what we've been looking into, or what I've been looking into in the past week. And this is kind of what will happen once we actually build a portfolio. A lot of the show will be about, deeper into the stocks and deeper into the news that come about them. But the fact that I rushed into this one now made me too focused on one stock that we should be focusing is in finding what stocks we're gonna own in the portfolio. Whatever the case, this is a really good way to settle the suit, because instead of paying them, the problem now after the avian flu has gone away, right, is that the hens that produce the eggs have come back, like the numbers of them, right? So now there's an oversupply. All these producers have too many eggs, right? So this is great because now this company says like, okay, we have too many eggs. It's not, we would rather get rid of the eggs than the money. So we're gonna settle this suit by donating eggs, and it's great that the Attorney General of, or whatever, what is it called, the State Attorney of Texas accepted that. That's really good for them, because that way they can get rid of those eggs and settle the suit. So that's why the stock went up there too. And then also because again, it went up a little bit before, like it started to rally up like from this bottom before those news, but it's also because again, it's so cheap. So that's kind of the summary of what happened here with Calmain, and a way to learn that you don't want to ever rush, even if it's really attractive, because you might be missing some things, and also because you don't need to, or we don't need to in this case. Like, and in general, yes, an investor, you don't need to hit until you're completely certain. And we had a method in that sense. We're going to analyze all the stocks and then decide, right? So I might fall into the trap again, but this is just a way to help hold myself accountable for the fact that I shouldn't have rushed into it. Still, I played it pretty safe, because even though I rushed into it, I rushed into a very safe bet. So even though it didn't work out my way, the downside is very limited. I could be wrong about that too, and the stock could continue to tank, but it's just like the probability of that is really low. But at least I didn't just go into some meme stock, right? Anyway, so what we're gonna continue to do now is we're gonna leave this aside, calm stock, and we're gonna continue to move through the stocks. Before we do that, so when we decided to have all these stocks together, we were like, okay, and this was Evan's idea, and I think it's a great idea. At first I was like, reluctant because I didn't want to go through the motion. But basically what we built is a paper portfolio, which I have here. So this is of fake money. We built it on 100,000, more or less, because it's harder to you kind of do fractional shares on many of these. So we had to adjust it a little bit. Basically, because the portfolio that we're going to own is going to be 10,000, we did here, okay, we're going to just, in paper money, buy on equal weight. Like we buy the same amount of money as you see here on the cost, more or less, for all the stocks in the list, which are about 92 or something like that. And we're going to just see how they behave. And it's not to influence our decisions, but it's more to just to have them all in the same chart and see, like, from the moment that we built that. Right, so we can see here in percentage and in money how the stock price have changed for the names that we have just pre-selected. There's 92 names that would, not all of them, obviously, like a very low part of them, like maybe 10, maybe even less of them will be in our portfolio. But just to show you guys, again, for accountability and to see how things are going. We're doing well for the stocks that we pre-selected, and this has been like, I think 2-3 weeks, maybe 3 weeks. But caveat, huge change has been from this one. Now, I don't know how justified it is, but this is a 73% upside on a stock, which again, it's only, it's $800 out of 4,000, but it's a sizable amount considering the amount of the whole portfolio. Now, we do have a lot of other gainers, right? ASMR has been doing great. Evan has owned the stock for a long while, so he's very happy with that one. And then there's other ones, like I think this is a bank of where is it called? Broadway Financial Corporation. Then we have Rocket Labs. MU, like chips and stuff, right? This is like the memory, computer memory and chips. What else we have? Nebius. I don't remember because we selected them some time ago. You guys can go back on the episodes and check it out. But I don't remember many of them. Even I don't remember TSSI. I was looking into it a little bit. It's kind of this made me recall, because I remember reading this when we were looking into it. Engages in planning, design, deployment, maintenance, refresh, and take back of end user and enterprise systems. So they basically are one of these middleware, I guess. I mean, it's not middleware because that would be within software, but middlemen that build systems for enterprises. So they basically build software infrastructure for companies. So for some reason, I mean, we can check it out a little bit in depth, but not too much. They've been doing really well. Like the stock price recently, like a huge upside, right? Like 60%, 70% as we saw. And we just happened to bump into that. Like we just have, in the sense, like when we pre-selected all of that, we happened to open this paper money portfolio right around the time that it started going up. So this rally has been on our advantage, but we shouldn't take too much credit for that. I mean, actually, we should take no credit for that, apart from the fact that we showed interest in a stock. But But yeah, we didn't do any analysis. It's not like we purchased it expecting this rally. They just happened to be. Okay. So let's see where the rally was. So this should explain enough. Whoa, I don't know what I did there. Let's see when the rally started. When did the rally start? Like January 2nd or so. When is the biggest rally? Yeah, like here. Shares close up to 877, now 716 after reaching a day high. Appears driven by increased investor attention on social media, highlighting the company's position. Yeah, so this is the thing. I think this is a very small cap. So when we have companies this small, that's why you can see rallies like that, which is why like retail investors love. And I was thinking of that, and I think I'm gonna dedicate this episode to that, or I was gonna do before, because I didn't know if Evan was gonna be able to join, to just look into really small names. Like I wanted to look at the Russell 3000 because I think that's where we can find an advantage. And if we find a good company that is a small cap, there's higher risk, obviously. But look at this. This is not even $1 billion. It's 300 million market cap, and it's now 300 million. It probably was around 200 million at the time. But if you find something like that, it's much easier for it to move up because volume can easily tilt the scales in the sense like because it's such a small cap, which means there's a small amount of the overall money in the financial markets dedicated to this company. When it catches attention, like it has happened to this one, then a lot of money relatively flows in, and that pushes the stock price. It's like kind of how pressure works in a fluid system, right? In which is like if you have a really small like tube, you don't need to add as much water to increase the pressure. Like how a jet engine works is that it's like it makes the inlet or the outlet of the air very small, and that makes the pressure go higher, much higher, right? So that's kind of what happens when you do smaller cap, is that you can take advantage of that inflow of cash and higher pressure that pushes the price dramatically up or dramatically down if the money leaves quick. Okay, Evan is ready, so I'm gonna call him on Discord. And we'll brief him on what we've been talking about. And let's see here. Give me 1 second, guys. I gotta stop biting the skin out of my lips. Such a bad habit. But I must say that one of the main reasons is not even like the skin gets dry. So it's more that my lips get dry, and then I have the bad habit of peeling the skin off with my teeth, which is pretty savage once you put it that way. All right, 1 second. I gotta switch to the other profile. Oh, there we go. And hello. Are we here with Evangelist? How we doing?
Hello.
You hear me, right, or no?
Yeah, can Stream hear me?
Yeah. Oh, well, I'll check again. I did check my mic, but say something.
Say something.
Yes, they hear you. So let me share my screen. I was briefing them on my little semi fuck up on Calm, which has been doing better now. So the news was because they settled a suit with the Texas government, and they basically donated 2 million eggs to settle the suit, which is great for them given the fact that they have so many eggs. But I was just kind of being like, oh, this is a cautionary tale of like, even if a stock looks very interesting, if you haven't done more research, because the reason was like, the reason was so cheap is because they were anticipating lower earnings. You gotta kind of be careful. You don't gotta rush into things. I was like, even with that, I don't think I'm gonna get too burned because it's a safe enough bet, but it wasn't a good bet to rush into it. And then,
yeah.
And then I was talking about this other stock, but let me get you on the screen, and then we can. Oh yeah, there we go. Yeah, so I was going through. You can see my screen, right?
Mm-hmm.
Right. So I was going through the paper money portfolio, and I was like, okay, we've been doing good, if we can even consider this a measure of anything. But we saw this, right? There's this huge outlier, TSSI. And I don't know if you remember, I'll brief you in a second, but it has gone up significantly. This is a very small cap. It was about probably 200 million. Now it's about 280, 290 million after the move up. So it was one of these like middlemen companies that they build like IT infrastructure and software for bigger companies. So I was kind of looking into why they've gone up recently. And that's kind of when we called you. But I don't know if you remember more about this, guys, and why we were interested in them, or if this was just part of the screener. But yeah, here it is.
It was part of the screener, but let me see the financials.
Right. So yeah, I mean, yeah, okay. I was gonna, yeah, whatever.
What's the news story? Why is it up so much?
Yeah, that's what I was gonna look at first before the financials, but we can go to the financials if you want. You want to like see earning or see? Well, I mean, definitely
Yeah.
they've been growing. Yeah, but again on a very low base. But yeah, they're probably taking advantage of just the industry and they're well positioned. But I think there
Go to
must have
the
been other news.
quarterly.
Quarterly, yeah.
No, I mean that's a huge jump in revenue, bro. It's like 200%
I
revenue
know, but
growth.
like we already knew that. I think like that's when like yeah, this ended 2024. So like what I'm saying is that that's not the news why the stock has
Ah,
gone
but
up.
look, even now they're gonna be up another 100% almost, damn near.
What do you mean? Oh, the revenue now it's gonna go. Yeah, yeah, yeah. I mean, we can look into it, but do you think it was that they just reported earnings or something like that? I think it might be something a little bit more than that. Could
But why
be.
was their Q3 so bad comparatively?
Actually, it would make sense that they just reported in December. Yeah, actually, it is probably that. Okay. What?
No, they don't report in December. They're reporting now, like it's starting now.
Ah, wait. So let me see.
No,
When is the earnings
no
for
big.
this?
Go to Zach's. Oh, okay. Or I don't know if it has it there.
I mean, it has when the next one is. Yeah, it is March. So then, yeah, it must be other news. I was looking into that, like here when they tell, like the little briefings that they do here. So the stock started going up on January 2nd. It's a 70% data center services tied to AI. So like more investor interest, but like yeah. So it said like oh social media, right? So because it's such a small cap, I don't know if that's enough. I suppose. Yeah, correlated AI stocks. Like it doesn't seem like there was anything. I can look up other sources, but reports emerged detailing that the company considers sold approximately. Insiders sold approximately. Oh, this is after the rally, I guess, or during that. Shares momentum since the last report is short interest. Ah, they have a. Oh, look at this. Ah, maybe they're just 30% float was sold short. So maybe it's a short squeeze. Probably, right?
It must be, yeah.
Yeah, because that's a high percentage. Strong volume. 2.9 million shares, nearly double the average daily volume. I mean, it's wild that they were shorting. Oh, well, the PE is kind of high. Yeah. Because I'm like, why were they shorting that stock anyway if the growth was so high? Anyway, you want to look at the financials a little bit more?
No, I think I got it.
Yeah, I think it's
They,
just
they
that.
don't really they don't really make money, but they're growing crazy. Why?
Why are they growing? Probably just the
Yeah.
demand for what they do. But let's check the recent earnings. Revenues.
Nah,
Uh-huh.
go to like news stories. Like just do regular Google.
Okay, why is this? Okay.
Everybody's saying at this Needham Growth Conference. What is this Needham Growth Conference shit?
Valuation as leaders present. Well, this must be a. Yeah, Needham is the research. They do research. So they're like
I
equity.
know, I know.
Oh, okay.
But it's just a conference. Like
Yeah, so they
I don't
must have done a
understand.
presentation there and they caught a lot of investor attention or enough investor attention.
Look it up on Reddit.
Like look up this company or the Needham,
Y-
whatever.
No, this company. No, just go to Reddit.
Right? Or no?
No, well, this is like an ecosystem, but like just go to Reddit itself
Okay.
and then type TSSI at the top. There's an r/TSSI, which tells me that there's a what I mean? Because usually
Mm-hmm.
it starts somewhere, like it starts on Wall Street Bets, and then they make their own subreddit for it.
Right,
But keep
610
going down.
members. Yeah, I mean, it is one of
Yeah,
those. It seems small cap, growing, high short interest. Probably caught the attention of the meme stalkers.
keep going down.
Yeah.
More. Oh, this is like from months ago, huh? Oh, but it's not chronological.
Yeah, you want me to do it chronological?
No, do like, can you search within a subreddit or no?
Yeah, I
Like if
think
you
so.
go to,
Like if I go here, now it's searching there.
okay, so go to WSB and search in there.
Oh, okay. This is 7 months ago, though, 1 second. No, I mean, there's nothing recent, but
Yeah, huh. Interesting. Okay, cool. I
yeah.
guess it's just very micro cap, so it mooned for short interest.
Yeah. Yeah, I think, yeah, I don't know what exactly triggered it. That's what I was trying to figure out. But then it just, I guess it started piling up and then the short squeeze and.
I mean, any fund taking a big position will move
Right.
it significantly, you know.
Right. So it must have been that, right? After the Needham conference, somebody opened a position and then the stock started mooning. Because it was been like, just like, yeah, like from here.
And what do they do? IT solutions? It
Yeah.
provides comprehensive end-to-end technology solutions for data centers. What kind of solutions?
Like, I think it was like IT. Like, it's like build like infrastructure, like system integration, project
Design
management.
and engineering,
Yeah, it's just like building the
facilities,
data infrastructure, like connecting the servers, making it all run together.
simplifying complex
High
technology
performance
builds.
computing environment, data center operations, serving
Okay.
Fortune 100 technology companies, cloud. So yeah, that's what I'm saying. Like it is justifiable, but again, look at that PE though. So you really have to
Hmm.
grow.
The P doesn't matter, bro.
I mean, okay, why do you
It's
say it
literally
doesn't?
like, was it trading at 1 times revenue, bro? Like, this is crazy. No, because I mean, they're a young company, so it's like they're probably just trying to catch this wave of AI build out. So it's like
Oh, it
you
is
can
a
see that
young
it's
company.
working. Yeah, it's working for them because they're growing revenue. Are they positive on a
Yeah, they
cash flow
basically
basis? Like, what
triple
are they
revenue.
giving?
Yeah, how did they
Yeah,
triple revenue? Wait,
I'm
we just
telling you,
said.
300% like last year, and they're
Uh,
on track to do another 100% this year. If this, the only thing that's
okay.
weird is that Q3 quarter over quarter is lower, like much lower. That's strange to me,
Quarter
right
over
there.
quarter, huh? Yeah, no, but I mean, no,
No,
for big deals like this, it makes sense to have like
no,
that type of
Q3 to
seasonality.
Q3
Yeah.
to Q3 2024 is what I'm trying to say.
Oh, year over year. Oh, I see, I see, I see.
Yeah,
Huh. Yeah,
that's weird to me.
that
They had
is
a big
weird.
Q1.
But again, yeah, this could be all the structuring of the deals. But yeah, I mean,
Yeah,
it's like you gotta
yeah.
check those like I don't know what it's called right now, but this software and
What's
like
the cash
companies.
flow statement?
Yeah, but they have like what is it like backlog of deals? So they do like an average deal value or
Oh,
something like that.
they're very cash flow positive. Why?
Why? Why not? I mean, because they probably get
Like,
paid.
mm, nah,
I mean, the biggest item here is inventories.
inventories.
I mean, this is just so low numbers that it's hard because look at this, they had negative inventories here. So this is probably gonna fluctuate depending on when they have finished
Yeah,
building
but
a
even when they
product.
had negative, even when they had negative inventories, they were operating cash flow positive.
Yeah, so changes in working capital, which is again, what is working? Isn't that related to inventory too?
Mm-hmm.
And then there's payable and accruals, like yeah, it's just like the
Kind
way
of.
they structure the contracts. Like, look at it's 27 million that came from contracts. Yeah, they probably signed contracts that didn't get paid much later and things like that. So then they
Right,
have quarters.
they're consistently earning money. I mean, they are spending a ton on capex, like a ton, and it's only going up.
Nah, but that only makes sense, yeah, for a company like
Still up?
this.
Are you still on quarter? Is it still quarterly?
Yep. Annual.
Oh, go to the annual. Yeah, cash flow positive last year, actually. Free cash flow
Yeah, but you
positive.
see how it kind of fluctuates. Well, I'm like,
Yeah,
I think it
but
has to do.
those years are like specs. Like think about like this last year was their first meaningful year, really. Because again, they went from 50 million in revenue to 200 or 140 or whatever we saw, right?
Mhm.
They've already done 200 through 3 quarters of this year. Um,
Yeah, I mean
yeah, I
they're
mean,
gonna about to finish the fiscal year. Like they're gonna report it in March. They just finished
yeah,
the fiscal year, yeah. So Yeah, I mean they're a good company. I mean we did look into it because we liked it for some reason, but it's just a matter of now that the rally has happened. Well, yeah, I don't know. I guess we could look into it if you want more into this company today.
Yeah, we should.
All right.
Let's read the earnings call.
Well, like the recent one, right?
Yeah, the Q3.
All right, let's do. No, they don't have like a. Oh, this is it. I thought they would have a presentation too.
Feel crazy.
Okay, this is like the press release. Year-to-date revenue of 184.8 million, up by 88%, as opposed to year-over-year. Company integrates
Yeah.
yeah, right. I mean, who would say quarter-over-quarter? And software that provides related data center services. Today reported results for its third quarter. Our year-to-date revenue growth of 88%, adjusted EBITDA improvement of 59% underscore the strength and momentum of our business. This quarter's procurement revenues reflect a company.
Procurement just
There we go.
means how much business they got, essentially, right? Like these are the
Procurement
contracts.
revenue. Yeah, because procurement is like for like, but they procure. It's more like the customers. Yeah, they're procuring like
Mhm.
products from them. Okay, okay. I just wonder why they say that though. So they must have other types of revenues, maybe for maintenance, like maintenance revenues or something like that.
Mm.
Reflect that
Nah,
comparison.
procurement is just like they're logging their revenue before they actually do any work, I think is what they're trying to say here.
No, I mean I think, and I don't know if I'm right, but I think it's more like they have revenue that customers pay them for maintaining the infrastructure that they've built for them, and then they have revenue that comes from when they procure that infrastructure. But I don't know.
No, because look right there. It says system integration revenue of 9.2 and facilities management revenue of 1.6.
Yeah. So okay. So they have different names, but facility integration, systems integration is not the same as procurement. Like the customers will procure something, and then they have a system integration of that. And then it could be also that that's within the procurement. Like I
No,
don't think this is a. Uh-huh.
I think they're just logging revenue before they actually do anything.
Well, that makes sense. That every company that does that. Like if revenue is recognized whenever the operations of that quarter are related to the revenue. Like it's not like it doesn't mean that they got paid in cash, but it's like as long as they're providing the
Yeah,
business.
not every company does this, bro. Palantir doesn't have procurement revenue. They
Again, it's
procure a
just
contract and then
yeah,
they prorate the revenue as they do the job over time.
yeah. That's what they do too. It's like I feel like you're confusing things with the procurement revenue thing.
I don't think I am, bro. I think this is just like one big contract that they got.
It's like, why would they have this? You see what I mean? Revenue, they break it down to procurement, systems integration, and facility management. How would it make sense that this is like you're saying this is the procuring of a deal?
Yeah.
How would that make sense? Then why would is this them also integrating systems? Like this is the customer.
This is them integrating systems from a previous deal. Like this is like what the
Yeah, yeah,
deal
but
they had.
like these are all names of things that the customer gets. The customer
Yeah,
gets a management of their facilities, the customer gets a system integration, and the
yeah,
customer procures.
it's old customers. It's not part of the procurement revenue. It's separated.
Yes, but
There's
my
no
my
spread.
point is that it wouldn't make sense that this is a qualification of them procuring the deal from the customer. It makes more sense that since these are things that are provided for the customer, this would be the customer procuring something from them. No, I mean we'll look it up. Like let's see how they
Yeah.
define procurement revenue because they should say that in here, right?
Yeah.
Systems and facilities management, IT procurement services. So to procure like infrastructure, intelligence, technology. What was it? What is IT for? Infrastructure technology to present our procurement services as a separate segment consistent with the current year. Procurement services. We generate revenues from fees we charge our customers to procure third-party hardware, like for the
Okay.
services of
Yeah,
buying
yeah,
hardware
yeah.
for them. Yeah, okay, okay.
Okay. Okay.
So yeah, so that means, but that exactly, if they're doing that for a customer, that probably will become system integrations and management eventually. So yeah, it's like
Yeah.
it's the head of their revenue, their spearhead of the
Mhm.
revenue. In our systems integration business, where we deliver infrastructure to serve the exploding AI market. June, you cannot go yet. The volume of racks we integrated was lower than expected due to unforeseen operational requirements. We have implemented new procedures and processes and are seeing dramatically higher rack volumes in our fourth quarter. Right. So these people are taking advantage of whatever. Like, yeah, it's good for them, the whole AI growth, because that's providing
Right.
them a
So
lot of. Yeah.
who are their customers?
Oh, we can look into that, right? Let's just ask the boy. Who are their customers? Give me as many names as you can find and the percentage of revenue they signify. All right. So yeah, the biggest down it says here. Oh, interesting.
Yeah,
Wait.
this is the quarterly. Remember, it's down.
This is the one that is down, right?
Yeah,
But
Q3
then this quarter's procurement revenues reflect a comparison is exceptionally strong. Oh, I see. I didn't read that well.
because they had a big Q1 this year,
Hmm.
almost 100 million in revenue.
Hmm.
Um,
Interesting too
yeah,
that
that's
that.
why
Uh
it's
huh.
a little weird. It's a little
What's
strange, bro. I don't know.
Right, that with the growth in the whole. Well, it actually I mean, from I read a recent article. I don't know how recent, but it was like how a lot of AI companies, like the AI boom is kind of sizzling. It's not like mm, contracting, but it's like there was a huge growth in procurement. Procurement. Now I'm reusing that word too much, but like just a lot of AI companies going into market and buying data centers and stuff. So and then
Mhm.
now it's slowing down. So I guess that's what's happening to them. But it's good to see at least the systems integration is up. So yeah, I mean, it's just I guess that goes in line with them having those customers from last year now integrating those systems, which then will become facilities management revenue. That's the part that makes the least sense for me. Why their facilities management will be down, but maybe it's customers that have matured and now they do their own management. Full quarter of our new costs reflect a full quarter of our new factory that in the third quarter were not matched by the additional revenues we expect to increase beginning in the fourth quarter plus additional investment in the facility itself. So we can check when they bought that, which will show. John, no, okay, just wait. It's gonna dry up.
There's got to be the uptick in capex. They had like 32
Yeah,
million.
exactly. It's from the new
Yeah.
factory. John, come in. I mopped the floors in the other rooms, and she's just trying to go out. All right. Yeah, let's see. This is probably done. Effectively has a single economic customer. Oh, great. A large unnamed US based IT OEM. Oh, but this is like another middleman? Because I think OEM is like, what is that in IT? Like probably an integrator system too. But what the hell? That's wild. And original equipment manual. Oh, no. Original. Oh, so wait, what? So their largest customer is the manufacturer of the components. So they're kind of like maybe like an extension. Like how you remember when we saw another company that did something like that for Nvidia? That's like they're basically the integrator of Nvidia for them. So they make revenue out of like the customer
Yeah,
is Nvidia, but
this thing is garbage, bro.
oh, right away. Right away.
Yeah.
Like,
Yeah. That's all I needed to know, bro.
oh my
The
god.
fuck are we talking about, bro?
What are you- I mean, why would it be just right away? I mean, this just means that they're a layer of something else. If we just analyze,
Exactly.
yeah, but that doesn't mean I don't
You're
know.
buying the IT department of a
Right.
large unnamed US based IT OEM, bro. It's like what? Or I guess the sales department of it.
Yeah,
I don't even
we're
know.
basically
Stupid.
buying. Yeah, but that's not that terrible, maybe.
Why
But yeah, we're buying
why
the
is it
integ.
unnamed, bro? Why even
Oh,
name it?
yeah, that part is.
The fuck?
They
Like,
maybe don't
bro, this is
want, like maybe that manufacturer
ridiculous.
doesn't want.
What?
Yeah,
Oh, the large multinational company doesn't want to be named. Okay, why should they have privacy, bro? Like,
bro.
why should they
Yeah,
be allowed
it's a
privacy? Are you
huge.
trolling right
Does not publicly
now?
name this customer in its SEC file. It is only described as a global Fortune 100 computer technologies. Is it Dell or some shit like that? Or like, was it
That's
called
what I'm saying.
Cisco?
Like, if
But
it's
why?
Dell, why are they
Yeah, why are
scared
they
to?
hiding it? I wonder. It must be like in the contract, but again, I don't know who it benefits and why. Hmm. Okay, we'll ask the AI.
96% of total revenues, bro.
Yeah, they're just funneling through it. So just at that point,
Can you ask it, like, give me an idea of how long they're contracted together? Like,
yeah, one second. Customers and thresholds. The right so is revenue from one single USIT. It was saying that effectively 100% of its turnover is tied to that relationship, even if pass-through arrangements reach multiple end users. Practical takeaway: name customers, none. The key customers anonymous in fine, but yeah, one second. Right. Let's ask two things. I think like one of them is what you said, like how long have they has this largest customer been their main customer, and why don't they disclose the name? Who can it benefit to keep it anonymous? Yeah. The largest customer has effectively been its main customer since at least 2018. So not since the beginning, but I guess yeah, they could have just been like a small company, and then this big customer is like, okay, you guys are gonna be our little tool. Likely earlier, with concentration increasing after divesting other business lines in 2017, 2018. Yeah, just like you're gonna leave all the other stuff and just do this for me, maybe. The name is kept anonymous under standard. It is a usual thing. OEM NDAs and competitive reasons, which benefits both TSS and OEM by preserving pricing and strategic secrecy. Okay. Huh. Huh.
guess who it is?
Oh, you want me to ask him to guess who it is?
Yeah.
Okay, one second. The majority of sales are currently made to or through strategic alignment with our global Fortune 100. They love saying that. They're like, just to make sure you know, it is a cool one. Customer concentration increased. Content 2025 coverage and earnings Q&A. So yeah, but this is so like this could go to shit quick.
Yeah.
Yeah, I see your point now why it's garbage. Like I just realized by saying that. That's
It's
like
like
they
you're
can
not
just
giving us
drop him.
details on the contract or the customer or anything. Like we can't do further research on the customer's financial
Right.
health to
Yeah.
see. We can't do
Right.
research on the contract to see how long it's last. Like it's just
Yeah, it's like
ridiculous,
a
bro.
black
Like
box, right?
what are we doing, bro? Like it's like yeah, just trust us. This one
Okay,
customer
it's
makes up
not custom.
98% of our revenue, but
Yeah,
just trust
it
us,
is
bro.
weird. Yeah, just trust us. That they're not gonna drop this contract, dude. Why Dell? Okay, it's the leading candidate. Multiple independent write-ups explicitly describe Dell as TSS's sole. Oh, so yeah. I mean, some people that talk probably to customers and stuff. Cause yeah, there's somebody
You
that's
know, it's
gotta know
funny.
Dell. They're
I
saying
know a
it's
guy. I have a buddy that's
at Dell.
he's like the sales
Oh, really?
manager at Dell.
I
Yeah,
mean, you could ask him.
I could ask him. Yeah.
Would you? I mean, I still think even if we know who it is, the fact that these people can just get dropped out of the contract, right? I mean, it's more likely that they
Mhm.
just absorb them, but it's just kind of yeah. So should we just wrap it up on this one? Yes, everything's circumstantial but convergent. Investor letters, articles, and forum discussions all point to Dell. However, TSSS and the
Right.
OEM have deliberately kept the customer unnamed. Yeah, educating us. So what do you say?
Hmm. Yeah, this is like I don't know. I'm not a big fan of that, you know.
Yeah, I mean, neither, especially because of the high multiple. Like we can just buy Dell. It's probably at a lower multiple, right?
Well, Dell's not growing like this, but
I
yeah,
mean, it must be growing somehow if this company is growing like that, right? Like, what have we even?
Dell is not a public company.
No? Yes, it
Oh, they
is.
went back. They went back public. Yeah,
Oh, they
they
were.
left the stock market
I
at
mean,
some
look at
point.
that. They're at 15. I'd rather look into Dell if we're gonna look
Yo,
into this. But yeah, you don't
fuck
want to
that.
look into that. Then we're definitely not looking into this, guys. All right, let's take it out. Where?
TSSI.
TSSI. All right. Okay. Which was in software. I
Oh,
don't know why I put that in software, but okay. So let's see. Watch list.
Let's go to what's down the most.
Oh, I was gonna check just what's cheapest. But yeah,
Oh, that works.
what's down the most is FMCC and Fannie Mae and Freddie Mac. Down
Oh,
25%. Oh, that boy Bill Ackman, bro, is gonna be the ruin of us.
why, huh?
I don't know.
I did see some stuff about
Look
uh
at that. Well, I hate this fucking graphs. It's so hard to read. All right.
I did see some stuff about mortgages this week on Twitter, but I didn't look into it.
Oh, maybe there's been like more. What is it called? Defaults. Let's see.
Delinquencies, defaults, maybe.
This is the bigger one, or FMC, right?
I think
I
this
don't
is the
know.
bigger
Two.
one, yeah.
Oh, yeah.
Yeah.
Almost 10 billion. Federal National Mortgage Association shares are trading down 11%, falling to 856 in their fifth consecutive day of losses and reaching the lowest intraday level. Decline reflects mounting investor unease about the impact of President Trump's recent policy decisions on efforts to privatize. Wait, but that was the thing.
No, privatize is like take them off the market completely.
Oh, you're right. I thought they meant privatize, like sell it. No? Well, it could be. Couldn't it mean
Mm,
both things? Like
I
privatize
don't
as
think.
in like not make it government?
No, it wouldn't be
Okay.
down if that was the case.
Right.
It would be up
Not to sell. Yeah,
insane.
here it is. Agency director People's comments this week praising Trump's decision not to sell the company during his first term. Oh, which is discussion about the time and viability of a potential IPO.
Yeah,
Wait, no, but now I'm confused.
which has raised questions
I
about
know,
the
but this is in the
timeline.
first term. During transition, not to sell the company. Like he's trying to tell Trump not to do it. I don't know.
No, Trump's signifying that he wouldn't do it.
Increasingly cautious
Essentially,
about releasing. Yeah, okay. Yeah, there it is. Officials are. Yeah, my bad. Yeah, it's what you said. Officials are increasingly cautious about releasing the mortgage giants from government conservatorship, with Treasury Secretary Scott Bessent adopting a more measured approach amid
yeah, they put
concerns.
Britney Spears under conservatorship.
What do you mean?
They
Are
lost
you?
their mind.
What are you talking about? What
Yeah,
is
she was under conservatorship.
under government conservatorship?
No, under the conservatorship of her father.
Okay, you're just playing with me.
Essentially, they pleaded that she was clinically insane, and
Oh,
then
this
her
was.
father
Uh-huh.
was her conservator for like
Oh.
15 years and was taking like 100% of all the money that she was making in those years.
Ooh. Wait, this is
And she
when she
broke.
was doing well, like in the past?
This was like right after. So like
Oh wow.
it was like as she got older, she got a little bit insane, like shaved her head, started
Yeah,
acting
I remember
erratically.
that. Right.
And then her father, I mean, she's still crazy, by the way. Like if you see her to this day,
I
but she's
mean,
married,
okay.
and she got out of it like recently, like I think 2 years ago or something.
Damn, that's messed up though, that you can do that.
Mm-hmm.
That you can just
Yep.
call somebody crazy enough that you're gonna stick their shit.
All their shit, dude.
Yeah,
Like
Kanye
all
was
their
worried about that
royalties,
shit. I mean,
everything.
Kanye, I don't know how Kanye got away.
Yeah.
I guess
Well,
because he's a guy.
I think you have to be like related to them. Like I think the biggest
Ah,
one
right.
with Kanye is that his mom is
Yeah.
always in his corner, you know?
Yeah, also his mom is dead. His father could have done it, but yeah, it's like no.
Yeah, now she's dead, yeah.
The delay in finalizing the IPO structure. Yeah, okay, this is it. That's it. So yeah, Bill Ackman is wrong once again.
Not necessarily, but yeah, it seems
Okay,
like he is.
I mean, the likelihood has lowered significantly now.
Hmm.
All right, that's it.
No wonder he's on there just glazing the president crazy.
Yeah,
All right, let's look at PayPal, bro.
is that just out of just want to look at people? Okay,
You just felt it.
just yeah.
I think it's a good opportunity right now, and
Okay,
like you know what I mean. We're
okay,
trying to do actionable stuff.
okay.
Look at that.
11p. Wow, yeah. Okay, let's go into like the big boys here.
PYPL.
PYPL.
I like this company, bro. It's my third largest holding.
Oh, already. Oh, that's
Hmm. Well, I'm mostly in bonds, so my holdings are not large like that.
bonds, huh? I'm thinking of buying
Mhm.
Bitcoin, to be honest.
Yeah, buy some Bitcoin, dumbass.
I don't know. I'm doing my research.
I'm trolling. I'm trolling.
No, I know you're not saying to actually buy it, but I actually don't think it's that out of the question to not
No,
buy it.
I'm not saying to not buy it either.
Oh, okay.
Like
Yeah. It is. It's
saying like
just. It's
whatever.
like. It's just. I mean, it's because I'm thinking of buying gold, and then I'm like gold or Bitcoin, but just as a way to like not have dollars.
Bonds, my brother,
I
bonds.
know, bro, bonds. But it's like the same reason I wouldn't want to have dollars would be the same reason I want to have bonds. But I think short-term securities would be the deal. That's what Buffett has too. Mostly short-term treasuries. I don't know. Okay,
Yeah, I
let's
have
see.
long-term treasuries, but yeah.
That's wild, I think. But yeah,
Mm-hmm.
but you're
Yes,
you're a
sir.
wild one. So yeah, revenue just steadily growing, huh? Just one of these guys. Slowing down though, I guess the growth, right? Yeah, I mean, not that
No,
much though. Yeah, sort of, right? I mean, it's just
sort of. Yeah.
2 billion, right? 2 billion per year. Just yeah, I mean, it was 2.2 here, and here it was yeah another 2.2, and now it's just two. But yeah, that's just and here it was much more like four, but it's good stuff. Cost of revenue, oh, yeah, I mean that just probably goes in line. I mean, actually, cost of revenue seems to have grown faster,
Mm.
but selling in general that's steady, but software actually it's lowering a little bit. No, no, I mean just
About the
steady.
same,
Yeah, it's
like
about
the
the same. Yeah.
5-year average.
Yeah, it's 3 billion 5 year. Labor related expenses are lower. They probably just fire some people.
Yeah, it was
Advertising
about that.
expense. It's crazy. Why is this such a high compared to labor? I mean, it's software, I get it, but
Yeah,
then what is this
it's
going into?
advertising.
Oh, okay. No, but advertising is here.
Yeah.
Oh wait, is this inside? Oh, it is inside. These are
No, no,
inside. Yeah,
it's
look,
not
look.
in
Look, look.
yeah, it's inside that. Yeah,
Okay, that's what oh, but not in but this is a separate thing.
yeah.
Ah, yeah, I see it. Okay, yeah, then so what the hell? I guess just
Why is it
like
so
the
big?
fees. No, but that would be cost of revenue, like fees that they do
Mm-hmm.
for like the payment processing. Huh? Yeah, we can look into it. All right, research and development. Yeah, I mean I don't know what they got at research anyway, but they just have a little uptick there. I guess research and development would be like new features. Would be research and
Yeah,
development for a
yeah.
software.
I
Restructuring
mean, it's still
change.
growing.
What is this? They acquired somebody?
Restructuring charge. Yeah, probably some of their assets got
Oh,
re-rated,
well, they did fire a
restructured.
bunch of people, so this could be like, all the
Possibly, yeah.
yeah, the contract, whatever,
These are all
things.
small though in the grand scheme of
Nah,
things.
right, fair. I guess I'm looking at like the trends or whatever, yeah. Unusual expense here, so this could also be what is this restructuring related. Uh, okay. Right, my bad. Yeah, margins just expanding too? Or am I tripping? Yeah, right? Yeah. Operating margins expanding. Net margins. Oh, yeah. So no. Wait, so then why is there a switch here from this to this? Huh. Because they have a bunch of provision for income taxes. What is provision for income taxes? Provision for would that be for like taxes they're gonna pay eventually? Like provision for income taxes, like they're saving money.
Yeah, yeah.
So they're taking away from. Oh no, wait.
No, like that is
Oh,
what
that's
they're
just
paying.
taxes, right? Income before
Yeah,
taxes.
yeah,
And this is tax. Okay, my bad. Yeah, I'm
yeah,
tripping.
yeah.
All right. I mean, we just gotta move on to reading the filings a little bit, right? But let's see what else we got here. Cash flows. Cash flow positive. Right, depreciation lower every time, but just yeah, normal. I guess just software, I suppose. Deferred taxes, unusual items, other non-cash items, other non-cash items. What is this? But yeah, it's probably this like related
usually,
to contracts and
usually
things like
stock
that.
based comp.
Ah, wait, but that wouldn't be
Usually,
a specific thing here? No.
no, not in the Schwab one. They break it out in their personal one, but not here.
Oh, okay. Oh, okay. I see.
But usually it's stock based comp,
Right.
amongst other
Okay.
things.
Changes in working capital. Okay. Capital expenditures. Just lower actually, but just about the same. No, so the acquisition of business, they did it long ago. So that recent restructuring must have been just, the
Yeah,
fire. Oh,
they
look, sale
own.
of a business. So that's why they lost some employees. They sold some part of something last year.
Yeah, that might be the restructuring charge that we
Right.
saw.
Exactly, yeah. Because it's 466, and we were checking at 460, well, 438. But again, yeah, so it's the year after the restructuring because they sold that. Okay. What did they sell? What company did PayPal sell in 2023? Logistics business, Happy Returns to UPS, and also struck major deals to offload its buy now, pay later loan risk, selling European loans to KKR, agreeing to sell US BNPL receivables to Blue Owl Capital. Reverse suggested PayPal was exploring itself with Zoom unit. So yeah, it seems like they're getting rid of the things that probably not providing as much returns. Returns management service. Huh. Oh, because they had that as a service that they provided to like point of sale websites type of thing.
Yeah.
Yeah. So they're basically focusing. I mean, basically, they are focusing more to an extent on payment services instead of
They're
just the
cutting the
whole
fat.
suite. Yeah. Right. Yeah. Loans. They get rid of loans too. Okay. Let's see what else we got. Sell maturity of investments. Is this just like, yeah, probably for the some. I mean, we can check the balance sheet for what they have, but they probably just have some type of investment for their cash. They're not really. I mean, they did purchase some here.
Look at the buybacks, dude.
Oh no, here it is. Purchase of investments. Yeah, they're constantly buying and selling investments.
Yeah,
Buybacks. Okay.
look at their buybacks, dude. This is the best part of this whole thing.
Oh yeah, look at that. Yeah, they just keep increasing it. Yeah,
Yep.
I think I should buy. Yeah.
They're gonna do, like, if you go to the quarterly now, you'll see it's even more
Yeah, I just wonder why though.
for
Why
this
is it
year.
so depressed?
I don't know. People in the U.S. stock market think that nobody uses PayPal. The issue is that PayPal is not really big in America. It's bigger everywhere else, like all around the world, essentially, except for America.
And in America, it's not as big because of Shopify, or just because of Visa and
No,
Mastercard.
PayPal is, yeah, because of, yeah, exactly.
Hmm.
Visa, Mastercard, traditional banking, you know.
Okay. So why you just surprised about the Shopify thing? They're not a competitor to Shopify, you would say?
No, they're not.
But they provide
What did
payment.
what did I say that they're? I was surprised by the Shopify thing.
Well, your reaction kind of was like, yeah, I don't know, like you didn't expect me to mention Shopify or something. But maybe I read too much into it. Let's see here.
Yeah, why did you mention Shopify?
Because I thought they were their main, like the guys that kind of disrupted the PayPal thing, because they provide an
Oh
infrastructure for
no,
websites and then they provide a payment processing now. So they're like,
but PayPal doesn't help. What are you talking about?
well, when I
It's
go
not.
to
They're
buy
not at all.
something online, right? I buy it
Uh-huh.
through, I have the option of pay with PayPal, right? So
Yeah,
I thought
always.
if you have a Shopify store, the Shopify provides their own payment services as
They
infrastructure.
do.
So I
They
thought
do.
that
There's
would be
competition in
taken
the space.
right, but
Yeah,
they're
but
not.
that's like a small piece of Shopify's
Ah,
business,
okay,
and
got
it's
it.
just a competitor to PayPal. Like all these companies compete with PayPal essentially, you know?
Yeah, fair
That's why,
enough.
and competition in the US specifically is very, very much, alive.
Okay,
But
okay.
around the world, it's not. That's the weird thing. Like, people opt in for PayPal everywhere, really.
Yeah, I mean, I have it. I haven't used it in a while, but yeah, but yeah. I mean, it doesn't even matter what it is. What is it called? Yeah, that type of evidence, or it's just based on your experience. We can just see in the numbers that people are using, and we can check where the revenue is coming from to see where it's growing. But let's see here. Cash, they're spending cash on something, but it could just be purchase of investments, right? I mean, it probably
Yeah,
is. It
or
has to be.
repurchasing stock.
Oh, right. That's what it is, right? Fair enough. Yes,
Yeah.
exactly. That's what it is.
They also have a modest dividend. I think like 1 or 2%.
I mean, again, repurchase of stock is also a dividend, but yeah, yeah. But you're
Right, but
saying
I'm
on
saying
top of
like
that,
they're
yeah,
doing both. Yeah,
yeah. What is their dividend? Yeah,
not great.
not great, but I mean, we wouldn't buy this for the dividend. We would buy for a stock that is at 10 PE with the management aggressively buying the stock back and revenue growing
Yeah,
steadily.
there's still growth. Yeah,
It's just, yeah, it's like so
that's what I'm
calm.
saying.
So, what would you say
It's
would be the
just
catalyst, or just like a steady
there's no
rise?
catalyst.
Yeah, just a steady
Well,
rise.
I guess there are a few catalysts, but they're not major catalysts. It would just be the monetization of some of their other business arms. Like Venmo is not monetized still,
Hmm. Right.
but I
Management's.
think
Oh, sorry.
that whole argument is kind of dumb. I just don't think like Venmo is viable. I mean, people still use it, but like there's just so many better ways. Like the
Hmm.
introduction of Zelle here,
Yeah.
it just makes it so that Venmo is kind of useless. But
Right.
I don't know. I think their
Yeah.
main business is what they should focus on.
Yeah, it's interesting because I think like this peer-to-peer payments, they play a little bit into the social. Like I see, I mean, why the Venmo decided to do the whole feed, even though we both agree that that is not significant. But I like that. I think shows that those type of companies can take advantage of a psychological kind of mode. Because, for example, here in Spain, the equivalent to Venmo is Bizum, and now, by law, I can do an instant transfer to any bank account from my bank account without paying any fee. Like every
Yeah.
bank is forced to do that. So there's no point in using Bithum, but everybody still uses it because the thing is that the both the psychology and the ease of the fact that it's just that I just need your phone number, or I just need like I don't I'm not asking you for your bank account. Like it seems aggressive to ask for somebody's bank account, even though it's actually safer and it's not that hard anymore. Like just copy and paste a number. But
Yeah.
yeah,
Also, you can think of it as like it's more than just peer-to-peer transacting because they are trying to monetize Venmo by making it into a separate bank account.
right.
Because Venmo
Well,
offers
right.
credit cards and they
Yes,
also offer a debit card.
right.
So they're monetizing that ecosystem by just essentially making it a bank because that makes
Right.
Venmo the whole thing of Venmo makes it like it's like it's viable at that point. You know what I mean?
Yeah, keep your money in Venmo, right? Because they cannot
Hmm.
make any money really from the transactions, right?
Yeah.
Huh. But would PayPal do something like that as well too? Does PayPal do something like that thing? Which they do have credit cards because I used to have a PayPal credit card.
On Venmo, bro.
Oh, PayPal owns Venmo?
Yeah. What do you think we're talking about?
Oh,
Venmo.
I thought we were talking about Venmo being a competitor to them. I really did. My bad, bro. Okay.
No, no.
Yeah. Oh, okay. Oh,
Saying like they haven't
oh.
monetized Venmo yet.
Oh, they haven't monetized Venmo. Okay, okay, okay.
Yeah, they own Venmo.
Ah. Okay, okay, okay. Wait, but you can also have a credit card from PayPal. So I guess they're just kind of different marketing avenues to the same products. Event like really, like if you are through PayPal, then you can get the PayPal banking. If
Yeah,
you are
well,
through
like
Venmo, you.
Venmo is like their biggest reach into North America because
Oh,
nobody here uses PayPal really, not
huh.
comparatively to like other parts of the world.
Right,
Like a lot of
right.
people here use
That's the
Venmo
interesting
though.
thing. Ah, right. So everybody is using PayPal. It's just they don't know, kind of thing. And in Europe or in other
American,
parts, it's like people
the
use
American
PayPal,
cardholders,
but they
yeah.
don't use Venmo. Huh.
Because the biggest thing about people whenever you bring up Venmo, the biggest rebuttal is like nobody uses Venmo anymore. And it's like, first of all, if we're not talking just circumstantially,
Yeah,
the numbers themselves disprove that whole theory because people
yeah,
continuously use Venmo more, PayPal more and more, obviously.
yeah,
But also, like, yeah, just what I said is like everywhere else you go in the world, people would rather use PayPal for safe internet checkouts and then
yeah,
for money transfer as well.
yeah.
It's just safer, and they also have like their escrow. I don't know if escrow is the right word, but like they have like for peer-to-peer sales, um, they have like a system where you can essentially like it holds money in escrow
Hmm.
so that the buyer when you're buying something off somebody random online or something,
Yeah,
you feel safe in that Venmo PayPal like
yeah,
kind of escrows the money and then you have the chance to return it and then not have to, them
yeah,
not get
yeah, yeah.
scammed.
eBay does something like that too, I believe, which they hold the
Well,
payment.
eBay does something like that now because
Hmm.
like the whole thing that caused the initial fall in PayPal stock was PayPal was like merged with eBay like almost entirely.
Ah.
And then yeah, like the they were that entire branch of eBay's thing was PayPal. And then
Ah.
they stopped their relationship. Oh, hold on, somebody's ringing my doorbell. I'll be
Yeah,
right
no
back.
worries. So eBay was now eBay does it on their own. Got it. Management's profit-focused approach is bearing fruit with expected EPS growth of at least 10% through fiscal year 2027. The company's global scale, entrenched merchant relationships, and monetization potential of newer features layered on top of the core payments rail position ABA's earnings power as undervalued if cost efficiencies and transaction growth stabilize. The bearish view would be, though, declining market share in branded checkout total payment volume remains a critical concern, with valuations likely remaining depressed until growth improves. Branded experiences may be decelerating and not ramping as fast as initially expected, with improvements in branded checkout growth yet to materialize despite recent operational commentary. Transaction margins, sustainability, and profitability outlook. The bullish view is that the company delivered strong financial performance with impressive net margin of 14.83%, surpassing industry averages, demonstrating effective cost management. Management's focus on cost efficiencies and margin improvement shows the company's ability to sustain profitability while maintaining a solid return. Yeah, I mean, that's what we saw in the numbers.
Mhm.
Oh, you're back. And then the bearish
Yeah,
view would be anticipated transaction margin pressures in 2026 stem from interest rate impacts. Okay. Right, because they hold a bunch of securities. But again, and the
yeah.
companies shift past previous credit product growth with diminished momentum in key markets, long-term net profit margin expectations. Yeah. I like, did you see, were you here for this? Like EPS growth of at least 10% for the year 2027? Yeah, I mean, that would push the multiple even lower unless the market catches up. So it's a good thing.
Yeah.
PayPal
Yeah,
seamless.
if you go back to the Schwab, you'll see that even this year buybacks accelerated. Like you saw 2024 was 6
Right.
billion.
Yeah.
They've accelerated this year to 2025. Like they're buying back. I think they're um gonna do 25 billion over the next 2 years or something.
Yeah.
Like it's
Yeah. Wow. Well, isn't this in line with quarter three?
yeah, this is more than no, remember it's additive.
No, this is
Oh
the
yeah, it's in line with quarter three.
this
Yeah,
is
they're gonna do
quarter
like
cash
another
flow. But yeah,
20
but I
this year.
don't know what the other quarters were here. But yeah, we'll see what they do in quarter four. But again, it's only,
That's the total.
Hmm?
6 billion is total.
Ah, right. That's what you were saying, right? The fact that this is, okay, okay, okay. Yes,
Is
right.
additive.
Got it, got it. But
They
yeah,
get
it is
6.
it is lower, but yeah, I see what you mean. That is still a significant amount. Also, it's not it's lower on the amount they're purchasing, but they're basically
Right.
purchasing the same when they
It's
already
also like
have.
10% of their market cap per year is them repurchasing shares.
Yeah.
It's a crazy amount, dude. Like, I don't know.
Yeah. No, it definitely is a great sign. Because they're just spending the cash on this. So if this is the best investment they see right now, it's just their own company. That's pretty good. Look, but they right. Where did they get this cash from here?
Dude, they're cash flowing like 8 billion a quarter, a year.
No, right, but it's like a huge uptick there. But yeah, I guess it's right. Yeah, because in the other ones they were spending more. Where did this come from? One second. Man, did they did no wait. Am I confusing business with the restructure? No, these are the ones that restructured. Sell maturity of business. So this is what kind of uptick. Yeah, their cash. Sell maturity of
They
investment.
also own, I think they own a firm. Do they own a firm?
Firm.
My, maybe they don't
Oh,
actually. They own,
the company Affirm.
they own like a buy now, pay later.
Yeah, they did, but they sold it. BN, what is it here? No, the buy now pay later. Buy now pay later. Oh, that's what BNPL is.
Yeah, it wasn't a firm though. It was somebody.
Oh wait, but
Just
no,
like
they offloaded the loans, so maybe they still provide the service.
check out
It's just, they don't own a firm unless
no
this is a
check out
different
like
thing. What?
they own something like look at like Just give a history of like PayPal's acquisitions.
This thing, why I don't want the AI. Buy now, pay later options for shoppers. Oh, but they just a PayPal thing. But yeah, what do you want to look? Didn't does have a name.
PayPal acquisitions since 2018.
I mean, I could ask the AI, might be better. Oh, we have our own AI here too. PayPal has made significant acquisitions, including Honey for shopping tools. I remember Honey. That's the one that tells you deals and stuff, right?
Yeah. They paid way
Zettle.
too much money, by the way, but yeah,
Zettle. Why don't you
paid
zettle the
4 billion
deal?
for Honey, dude. Like my God,
Wait, what'd you say?
they paid 4 billion for Honey, dude.
Do you think that was too much?
Yeah, way too much, bro. Kidding me? For a fucking for essentially just like
A
a widget,
coupons. Yeah, it's like a coupon
coupon
spin.
widget. Ridiculous, bro.
What
Yeah.
is this much
You,
person?
you, I can tell. I know back then I was looking at it and they were recently wrote off like the goodwill that they put on their balance sheet was like it's like 3 billion or something like that.
Just Zettle is like a point of sale, or is it just connecting me to here even though it isn't?
Yeah, it's POS.
Yeah, okay.
Sweet POS.
And that was in 2018. Oh, well, 2018 was Hyperwallet and Zettle. Oh, it says it here, right? No, like, from a point of sale, yeah. Hyperwallet expanding PayPal's global payout solution. Okay. Honey, yeah, shopping tools, price tracking.
Payday is the buy now, pay later. Okay.
Ah, okay. Japanese, though.
Japan.
Oh, so they're expanding other markets. Offerings
Okay.
in Asia.
Well, they're not expanding. I'm
Nice.
telling you, they're global.
Yeah.
Like their biggest everything that like
Yeah,
PayPal's
so
entire
yeah.
business is outside the U.S. in my view. You know.
200 countries with 25 currencies and 220 million monthly active customers. But wait, let's just check. Yeah, I want to see whether break down their revenue by geographies and by like I don't know categories or yeah
Sure.
categories.
Yeah,
Yeah,
why not?
yeah. I just mean like where is it coming? I don't know if I'm expressing it right, but geography rate. Well, yeah, United States is yeah, but that's yeah. If you consider that the other one, also we would like to see how that's changing, right? Like how that percentage is changing. Countries other than the US and UK. Oh, so where is the UK then? Okay, but anyway. Yeah, where is the UK then? If this is 58 and this is 42. Anyway. Over the last few years, the share of non-US revenue has been gradually increasing. Now there we go from 38 to 43. Is that a significant amount? I mean, it's definitely eating out of the United States percentage of the total with the growing base on the whole thing. While the US share has declined in percentage terms, but still represents the majority of revenue. Approach revenue in two main categories: transaction revenue and other value-added services. Transaction revenue around 28.8 billion, roughly 91% of total revenue. Wow.
Yeah, this
Yeah,
is
so they
the
definitely are
other
not
value
monetizing.
add
Hmm?
is the part where the other value added
Right.
services is the part that they have significant room for expansion. You know.
Yeah, which also goes in line with why they made those acquisitions, which is like they're
Mm.
making a lot of cash. Let's buy companies that allows us to expand our pipeline. Hmm. Okay, let's see. And how are they doing on expanding revenues in other value? What are these services anyway? How has their offering evolved years? Okay. OVAS. Growing, but much more slowly than the core transaction means. So, okay, so the growth is still, well, I mean, it is 91%. It has to be driven by that. Which, again, right, so that still is crazy, though, that people are not seeing that. Yeah, they just are gaining more market share globally, right? They must have, right? In this transaction processing. Despite product expansion into credit, BNPL, data, and merchant tools, how fast OVAS is growing? OVAS revenue rose from plus 26%. I mean, oh, it's 2023, but Oh, and then
Yeah,
it slows down in
accelerated
2024.
sharply.
So it has recently decelerated sharply. Yes, a share of total revenue moved from 8.4 to 9.79 and then down to 9.29, showing that it is not yet structurally gaining. Right. So the acquisitions kind of did play out, but then didn't, I guess.
Oh,
Quarterly
so
data into 2025 shows OVA still growing, but at a mid-single digit rates, around 780 to 895 over 4 quarters. I mean, they are kind of getting there again, versus lower or slightly higher growth depending on the specific quarter. What other value-added services include credit and financing products, interest and fees from merchant and consumer credit, including legacy PayPal credit, working capital loans, and your pay later, buy now, pay later, receivables. Right, and then what they do is they offload those loans once they have them, and so they do they package them and sell them like the same way you would do an MBS, I guess. Okay.
mhm.
Partnership and network revenue from co-branded and referral partnerships, as well as white label and gateway services. Interest on customer balances, yield earned on assets. Oh, right, so the float. Nice. Venmo wallets, right? That's kind of they want that's where you see more potential too, right? Yeah, I mean, because
Yeah,
right, they are at the bottom anyway. So, well, bottom. Yeah, I wonder. I wonder where we can
it's
get data about how many people hold their money in Venmo.
it's like
Because,
I think like merchants is the big one. I mean, it could be the big one, you know?
mm,
Like people that do small business
yeah,
essentially, you know what I mean? Like niche
yeah, that
businesses.
actually, because it's easier to market them too, right? It's like when you have a business and stuff, you're trying to save money here and there, and then PayPal is like, look, we'll give you a good return on your money. Just keep it here. That way you don't gotta move it to another bank. But then it's
Yeah.
like, but then they're in the whole business of competing with banks, which is like cutthroat anyway. Like there will be a bank offering a better rate, like right? Like I
Yeah,
mean,
for
yeah, I mean
sure,
again,
but not
yeah,
like the
yeah,
same ease, you know what I mean? The same
right,
offering.
yeah,
Your offering is like a little bit more complete, I'd say.
yeah. Hmm. Risky data and merchant tools, fraud management, analytics driven, right? Just okay, just within this will be for those businesses, right? So yeah. For payment processing, how the OVAS offering has evolved. Scaling BNPL Pay Later has become the largest single OVAS component with about so that's where they make most of their money in that sector. Is the buy now pay later. Makes sense. Growing roughly 21% year over year and continued over 20% growth in 2025. Huh. Right, and now probably the fact that they also repackage and sell those loans provides them some profit. Balance sheet light credit model. Balance sheet light credit model. Right, because of the offloading, right? You increasingly sell loan portfolios. A planned sale of around 7 billion USD. Is that what it would be? Of BNPL loans to Blue Owl. Blue Owl. While keeping customer facing relationships shifted. Yeah, I mean, they're kind of becoming like an internet regional bank type of thing in which they originate loans, or internet like originator of loans. Huh. They could even expand that too, right? Like in which is not just buy now, pay later, like short loans, like micro loans. They could start doing business loans. I mean, they would just do more and more of what a bank does. They are already
Mhm.
positioned into a lot of businesses. They have like the pipeline to then offload the loans. So we don't have to worry about, because if we, even in an inflationary environment, which we don't want to get caught holding loans, like private loans, uh, they'll be fine because they're offloading them anyway. They just package them. Data advertising and merchant insights. PayPal is turning its transaction graph into audience and analytics products so merchants can run targeted campaigns, optimize approvals, which behave more like high margin software advertising revenue. So this would be more similar to Shopify, or am I reading it wrong? Like, would this be competing or whatever? Like,
Shopify's business is primarily they just do
logistics?
website solutions and
Oh,
logistics. Yeah.
oh, okay, right. So it's
They
not the
are
analytics and
Shopify
stuff.
is expanding
Hmm.
into these areas. So it is a competitor in that
Okay,
way. And
they're
like that's
both
why Shopify's
expanding.
business is so good because it's like
Hmm.
they're actually entrenched
Hmm.
inside of a small business from every aspect. You know what I mean? Like
Right.
they
So,
offer loans, they offer like
right.
banking accounts with decent interest. I mean, it's not great, but it's pretty
Hmm.
good for if it's like a balance because it's not a savings account, obviously.
Yeah.
Um, so they offer all that stuff, but I think all that stuff for them is still small. Their
Right.
biggest thing is literally just they do the logistics of your
Mhm.
website.
Yeah.
Like, I mean, you know what I mean? Like they give you the software and then they do
Right.
the like they're building the logistics. They haven't built it yet. It's not even close.
Right.
I think they're starting in Canada,
Huh.
but it's a hard thing. Like
I see. That also kind of
Amazon is the one that built it out. You know what I mean?
yeah. So I think it makes sense too why then out of all these other products, the ones that grow the most are the ones that are not competing with Shopify. Like the ones that are just customer direct for the buy now pay later, but then these other tools are growing less because you have competitors on every ground and that are some of them better entrenched like Amazon or Shopify. But again, if they just focus on this, originating small loans and then they are expanding like globally, that's still good enough. And they're expanding margins, they are getting rid of the fat, they're buying back their stock, they're at 11p with a expected 10% growth. So that what is
Yeah.
that?
They're
Forward
never
P
gonna
of what?
no, it's
8
just like
or 9?
yeah, it's never gonna be like you're never gonna buy this. Like the idea is not to buy this because they're gonna win some kind of race in their industry, you know?
Yeah, right.
The idea is that they're just entrenched. They're gonna hold us like whatever market share they're gonna hold,
Yeah.
and they're gonna hopefully they're gonna continue to innovate. But like the whole thing is that it is cheap,
Hmm.
and that's why it's a good investment. You know what I mean?
Yeah.
Like people misunderstand, not misunderstand it. People
Yeah.
misunderstand. People nobody wants it. It's just like ugly, you know?
Right. Would for example something like Revolut eat their lunch? Because
Everybody eats their lunch, bro.
I
Because
know, but
they all eat each other's lunch. You know what I mean?
I
Like it just
know, but
there's
what I'm
no
saying is like when we see like just to kind of get in the viewpoint of why the market is paying such a low P, like could it be that with everybody being able to eat their lunch, their revenue growth just kind of I mean being fine but slow, like it becoming stagnant or starting to lose revenue because there's other players that are coming in aggressively that do exactly what they do. Because Revolut does
yeah.
an increasingly more of what these people do buy now, pay later. Like now I can go to a website and when I'm gonna pay, it's like pay with Revolut Pay. Like the
Yeah,
same as
every company,
right,
every fintech company is
right, yeah.
doing some version of the same
Yeah,
thing.
yeah. So yeah, so
But
then
there's, you
are
know,
you not worried about their revenue actually starting to decelerate? Not
nah,
decelerate,
because
like contract?
these companies have been around for years already.
Yeah,
Like
but
Revolut is not a last year thing. It's been around for like 4 or 5 years already. Same thing with
yeah.
all these other fintechs that do a similar thing. It's just like I'm telling you, like it's just it's the landscape is what it is now, and
Yeah.
that same thing that you're echoing is the whole reason why the valuation is so low. So it's like priced. You know what I'm saying?
Yeah, yeah, no, exactly. That's really what I'm trying to do. Echo why the valuation is low. I'm not saying it really concerns me too much because it's like what you're saying. The safety margin is good enough on a company that is not showing any signs of weakness. If anything, it's just
Yeah,
showing sign of consolidation. They are doing the right things by being more efficient, improving their margins, just being
yeah.
strong without needing to
In
be
reality,
aggressive.
the biggest thing is like it's gonna be management's execution is what's
Right.
gonna really make the
Wow.
difference. Like management needs to execute just to maintain market share. And if they do that, then this is a great investment. If they don't do that, then it might not be a great investment. You know what I mean? Because that's why you. It's just what you're saying. It's like
Yeah. If they
if
lose,
they lose market share
yeah.
significantly, if people just keep innovating and they don't, then yeah, it's not going to be a great investment.
But that's why, from what we're seeing, I mean, I'm gonna look a little bit more into like the profile of management and the board of directors. But from what they're doing, which is we have a bunch of cash, and instead of buying businesses like they did in 2018 and seeing them not really pan out, like exactly, it's like they don't need to be aggressive to be strong. They just need to not be weak. So if they're not losing business, that's all that matters. Let all the other
Yeah,
players come in aggressively and spend money expanding, and as long as they hold the fort, they'll be fine because they just keep
yeah. The
expanding.
acquisition angle is like yeah, it's done. It's dumb because it's
Right.
like
Yeah.
why are
Yeah.
you? You can just build the same offering. Like you don't need to just hire good engineers
Yeah.
and you'll be fine. You know what I mean?
Yeah. I mean, it's yeah. Probably Honey's the one that really because that's what they got to this.
Everything,
Yeah.
every purchase that they make is stupid because like why are you buying?
I mean,
I
I
mean,
think this
I
one might be that good one.
POS. Oh, buy now,
Payday.
pay later.
Yeah, it's like
But
let's get into
why?
a market because that way they can get into a market quicker. It's just like a way to grow quick into a
Yeah,
market.
I
You
guess,
know?
yeah.
I think that,
But
I
you could
mean,
literally just build it out and advertise in the market. Like, I don't know.
yeah, but it's like it gets to a point. It's like how much does it cost you to build it out when it's already there, and
You
it's
should think about it like it would be good if they paid that for them if they were struggling. Like, let's say Payday was a like a firm in Japan that was already public
yeah,
and they were down significantly, then it would be a good acquisition
yeah. We don't know
because you're
exactly how
actually
the
getting
deal
it
played
cheaper
out.
than it would cost to. Yeah, like we
Yeah,
don't know exactly, but
no, but like what
essentially,
I'm
like
trying to
that's
say is
the only
like
way.
if we compare it to like Honey, it's like an acquisition in which you're trying to get into a different line of business or a different product that you're saying. Whereas here, I see this more as like an aqua hire. It's like we're trying to get into the Japanese market. Let's just instead of hiring a bunch of Japanese engineers to build this Japanese tool, let's just buy one that is in the market now. Yeah, it depends on the price that you're paying.
Yeah, well, the engineers don't need to be Japanese, but I understand your point. Yeah.
Yes, yes. I guess I was just trying to make the point that
If
you're
it's a
trying.
good deal, yeah, if it's a good deal, then it makes sense. We just don't know, you know.
Yeah, I mean we can look into it, but it's not gonna be that relevant anyway.
No, but
The
we don't.
point,
Even if we find out, we can't compare it to what it would cost internally to do the same thing, you know.
I mean, it's possible, but it's definitely not worth our time. But we
Yeah.
can. But yeah, let's see here. PayPal management team. Who we are?
The new CEO is new.
Oh, he
Yeah, this
is
guy.
Alex
Yeah.
Chris. Alex Chris is some wild name, bro. Well, double S kind of saves him. All right. Has spent more than 2 decades harnessing the power of technology to help individuals and small businesses. So, okay, come on. I guess I should have gone to a different page. Prior to joining PayPal, Alex held various roles in increasing responsibility at Intuit. What is Intuit? This all like pay now, like whatever,
No,
buy
it's
now.
like tax. It's like
Ah,
TurboTax.
yeah. He most recently served as Intuit's executive leadership team as the executive vice president and general manager of Intuit's small business. Ah, right. So they're gonna go harder. I mean, not harder again. They're not trying to be aggressive, but just yeah, they see that the potential is in the businesses, like you were saying, the merchants, not as
Yeah.
much like the Venmo individual users. Where he led a global organization responsible for delivering QuickBooks and MailChimp to millions of customers. Nice. Throughout his 20-year tenure with the company, Alex also served as Senior Vice President and Chief Product Officer. Right, okay. So this is interesting. Have they released any new products? Let's see. Full suite of QuickBooks products, including payroll and payment platform segments. And when did he become CEO of PayPal? Are they gonna let
This
me
was
see this?
recent, like
I
2 years
don't. Oh, there we
ago.
go. There we go. 2023. Wow, yeah. He's board of directors at whose? EVP General Manager for this. That's what we saw. Yeah, he was a long time, huh? Into it, right? 19 years.
Yeah.
Wow.
He's a young guy. How old is he?
Well, relatively, I guess. But yeah, let's see. If he
Wait, when did he
graduated,
graduate
yeah, right,
college?
good point. Tufts Economic in 99.
1999. So
Nice.
he's 18. He's 22 plus 26, 48.
Yeah, he looks younger for sure.
Yeah.
Yeah. Anyway, let's see. Isabel Cruz. Oh, well, this is people officer. What do we care?
Get her out of here to human resources.
Is this now? Is CFO? Is this small business and financial services? No. Wait, did she
No.
come from Intuit? Maybe did she bring her? Did he bring her? Senior vice president. Yeah, so he brought her in from
She looks
Intuit.
annoying.
Yeah, she does. I was thinking a similar thing a second ago. That's funny. But yeah, okay. So he brought her along. That's good. So yeah, definitely they're trying to do something more business related. Frank Keller. Wait, that sounds like some
Yeah, you need
Nazi.
to look at the girl. That girl is the one.
Wait, what?
Go back.
Okay, what? Okay, I guess we'll go now. This one,
That
Suzanne.
girl, Jamie Miller. Jamie Miller.
Ah, yeah, bro. She looks like Amy Poehler. PayPal's chief financial operating officer. She leads PayPal's. But this is probably been here for a while. No, oh, she was at EY. No, actually, she doesn't seem like she. No, she seems recent too. Yeah. So they've been doing a bunch of changes. Ah, come on now, just. All right, does it tell me here where? Okay. When did Jamie Miller join PayPal? Yeah, 2023. But yeah, so about the same when he joined, right? Yeah, so he just brought, yeah, he just cleaned house with the team or whatever it's called. Not clean house, maybe, but where did she come from? Yeah, just he just hired a professional from accounting. She was at Cargill, financial activities. Yeah, I mean, I don't think she's that relevant. She just seems like a capable CFO. How about this girl? When did she come in? You're not gonna let me see it? Keriri. 2024. Okay, so recent hire. Where did she work before? Where is she? Like, I want to see what country she's into. She like Africa? I mean, I'm making an assumption here. You guys can bury me for it, but
Big time.
her name's Kiriri. Doesn't sound. Anyway, let's see.
Pfizer.
uh, that's not gonna tell me. Okay, let's see. No. What did Susan Kiriri do before? Head of Global Business Solutions at where did you see that? But it's merchant focusing, including the Clover Business Merchant Platform Carrot Enterprise Omni-Channel.
Yep.
But what is Pfizer? Do you know them?
Yeah, they're like what's it called? Healthcare.
Oh, no,
No.
no. Financial is just
Yep.
like small businesses, financial institution, fintech,
Uh,
or commerce.
I'm thinking about Pfizer.
Oh, Pfizer, like the
Lol.
pharmaceutical.
Yeah, yeah.
But yeah, I want to see head of global business. Why? Oh, she was that same thing at Pfizer. Okay. Merchant focused. Okay, so again, just all merchant focus. So she's not focused on a specific market, then I guess she's just global. Okay.
She's focused on merchants.
Just on the global merchants. General Manager, Large Enterprise and Merchant again, yeah. Chief Legal Officer, Bimal Patel. Kasik Rag. Now, where is this guy from, you know? Could be anywhere in Asia.
He's
Really.
Indian, buddy.
With that name, Kausik Ragopal, I guess.
Yeah.
Kausik? I've never seen that. Diego Scotti.
He's
Scotti.
from Hyperbad.
Serini. Okay, let's check this guy out, but
Also an Indian.
there's no chief product officer, so then is this guy acting basically as a chief product officer? Okay. Which makes sense with his experience. Let's see. This guy's probably just
He's
IT.
him. He's him.
Over the past 25 years, has played a pivotal. Oh, he's been here, huh? For a while. No. It's technology organization, so okay.
They need to get rid of this guy.
He was at Walmart, man. That's good. I
Nah, I
love
could
me.
tell. I could tell he doesn't. He's not.
He's
Not it,
not
bro.
committed to the mission. I'm dead. All right. Let's see board of directors, I guess.
I don't think we need to see board of directors. But
No, I just want to know just a little bit about where they're going with this.
is
Joe
Elon
Chick?
Musk still there?
Nah, I doubt it. Yeah. I mean, there's only okay. I was gonna say there's not enough women, but there are a good amount. Joy Chick, she's a joyful chick. Since 2020 March, this is recent. President Identity and Network Access at Microsoft.
Let's go.
Security, interesting. So this is why? Why would she be joining? A member of the Compensation Committee and Risk and Compliance Committee. Okay, that doesn't seem. I thought it was gonna be more like a change in product. This guy, why is he looking at me like that?
Yo, he's rising.
Since 2015. Okay, he's been here a little bit longer. He was at eBay from March to July. What the hell? He was at eBay for only 3 months, or whatever that is. Cristodoro is a partner of Patriot Global Management. Okay. This is like a finance bro. Yeah, investment banking analyst at Morgan Stanley. Merger and acquisition. So he came in probably at some point. I mean, I don't see this. Why this? But yeah, okay. This is not relevant to us. This guy, was he at the board before being CEO? The hell? Did you send this? Oh, yeah.
Yeah.
Told the buyer to invest in S&P 500, bro. Send me this. What is this? Not is it like a coin? What the hell is it? Saga. I'm dead. I didn't even read that at first. I'm dead. I mean, he did well. He worked out, right?
He did incredible, bro.
Oh boy.
Oh my god, bro! He put $100 and made fucking
44,000.
21K.
Okay. Anybody else? 2024. Chair of the Audit and Finance Committee. No, we don't care about that. Yeah, I guess there's nothing. Oh, 2024. In 2019, has served as President and Chief Executive Officer of HP. So this is the CEO of HP, who is on the board since 2024. And he's over 30 years. Senior leadership position. Okay, I guess maybe he just invested.
Hijo de
Became a
puta.
director. Gail McGovern. That's some last name, but that's a powerful last name. I'm Mr.
That's a good
McGovern.
name
Right? I'm
for a
Mr.
governance
McGovern.
role.
A corporate governance and nominating committee.
I'm telling you, she's McGovern.
It's McGovern. Finance committee. Nah.
They should put her on the
Moffat.
board of McDonald's. Dude.
Is Warren Moffat. All right.
David Moffat.
2015. Nice. He came with eBay
Warren
too.
Buffett stepped down. Do you know that, right?
Long ago, no? Now he's, what is it, Abel that he's in charge? Or
Yeah, Greg Abel. Yeah.
nice.
No, he stepped down like a couple months ago, dude.
Oh, I
Like, or
thought,
even less than a month.
he definitely started the transition some time ago because I heard about the Abel thing. But yeah, okay.
Well, he hired those two guys a long time ago.
No, right, but I don't know. Whatever. I don't
And
know
he
what I
said that, like, yeah, once I'm done, it will be him.
right.
Like, he just, yeah.
Yeah,
But
it's a
now
dynasty.
he's done. But dude, he did an interview on CNBC again with that girl, with the
Oh yeah,
Becky Quick
they
or
love
whatever.
each other. Yeah.
Yeah, and like he's still sharp as a tack. Like it's crazy, bro. He's 96 or something, 97.
Yeah, it really goes to show.
Like
You gotta train your brain, bro.
literally, bro. Like just stay working,
Yeah.
stay reading, and
Yeah,
you'll be good.
Yeah, and don't stress. I think that's the main thing from my mother that I saw. Like I think my mother got a big part of the Alzheimer came from she was just stressing her whole life, man. She's gotta not stress, man.
My mom's the same shit, bro.
Oh well, let's hope for the best there. But yeah,
Might have to get her on the nicotine.
I don't know. Get her on the weed or something just to calm her down.
No, the Nick is like it protects your brain, you know.
Oh really? I thought it was like adrenaline. That's all that nicotine did, just like release
No,
adrenaline.
nicotine is like it sharply decreases your risk of mental related disease. Like disease is the word for it. I don't know. It's a neuroprotective, essentially, is what they tell you.
A little zany. Okay, well, okay, this is not interesting either.
All right, enough with these people.
Yeah,
bro.
okay, yeah. I was just seeing if there was some clues there. What I want to see though is last earnings, and then I want to see. Yeah, this is this TSSI. What else do I want to see with these guys? Like just their holding. I mean, it's like I don't know what I'm trying to do at this point. To be honest, I don't know if I'm. What would be a smart thing to look into with these guys? Because I think it's like I feel like we do very surface stuff. So, but we are. This is, I guess, the first round of selection.
You think this is surface stuff, dude? We do more than like 90% of people that buy stocks on the retail level do.
I don't
Anyway,
think that's a good way to compare ourselves. But like, I don't think we should
it's
be.
not. It's not. But we're doing more. I mean, listen, we could do a DCF.
That's not even what I want. No, I want to do like read the statement, like the whole 10K or some shit. But I think it's
Yeah,
too
we can do
soon to
that.
do that. Yeah?
Yeah.
Now? Okay. Okay.
We should do.
I think we
We should
should.
go and read.
Uh-huh.
We should go and read the Morning Star
Okay. Yeah.
thoroughly.
All right. Let's do that.
Ooh.
Where would that be? Here.
Yeah.
Then here it is. Narrow mode. Yeah, that's kind of what worried me about them. But yeah, don't chill here.
Don't worry.
Not to worry. Not to worry. ESG risk, bro. That's high. Okay.
Oof.
Oof. Overall results. Oh, for the earnings, great. Well, yeah, we'll see that too. He's a CFA. Brett Horn. Overall results largely held up better than expected in the third quarter as PayPal showed strength across its business. Why it matters. Top line growth in the third quarter was solid, with net revenue increasing 6% year over year and on a constant currency basis, and payment volumes up 7%. Growth was relatively broad-based. PayPal branded volume growth held steady sequentially at 8%, although US volumes picked up a bit. Good. While Venmo and PSP Braintree. What is this?
They're a business.
I know they're a businessman.
They're a businessman.
I'm a businessman. Braintree Paper is an integral what the hell is wrong with me? An integrated payment platform from PayPal offering businesses a comprehensive solution for accepting diverse online payment. Oh, so a point of sale then? So end-to-end checkout experiences? Oh no, it doesn't. I mean, doesn't have to be just online. Yeah, okay.
Yeah.
Omni-channel payment. Okay.
It's just the company behind like checkout with PayPal.
Okay.
Websites. Let's just check out with PayPal.
And they acquired these guys long ago in 2013.
Long
Okay.
ago,
All right. Growth picked up to 14%. So yeah, so their merchant thing must be paying out because if Braintree is the one growing 14%. Oh, 6%. Venmo is growing 14%. Oh, wow. PSP is starting to lap efforts to call unprofitable business. What does that mean? PSP is starting to lap efforts to call unprofitable business. Some weird sentence. Do you know what that means?
No.
Yeah, okay. Additionally, management pointed to a 20% increase in buy now, pay later volumes as a driver across the business. We continue to see transaction margin dollar, essentially gross profit. Right, the money they make for transactions. Okay, growth as the key metric, given PayPal's shifted to a focus on profitable growth. This metric was up 6% year over year, which was better than expected. While interest rates remain a modest headwind, this is being partially offset by higher customer balances. Okay.
Right.
Nice, makes sense. The bottom line, we will maintain our 94 per share fair value estimate for the narrow mode company and see PayPal's shares as undervalued. We think the market underestimates the strength of the company's long-term competitive position and its growth prospects. The company announced a partnership with OpenAI, okay, to embed its wallet into ChatGPT. Ooh, that would be pretty good. Well, we are encouraged to see PayPal open up new paths for growth. I mean, because that means a whole ton of new transactions, right? Okay. We are somewhat skeptical of the impact agentic payments. Oh, so it could be kind of like ChatGPT, book me a trip, and it would do it through PayPal.
Yeah.
Interesting.
That's what they're working on right now at OpenAI, is like putting all those things in.
Did you see that they now offer like, what is it, ChatGPT Go, trying to compete with Google's, in which you only pay $8?
Oh, yeah, with ads.
Yeah. They're probably losing market share in like the lower tiers to be doing something like that. I mean, I don't pay for ChatGPT anymore. Claude is
Just
so
chat.
great for coding, bro. That shit's fire,
Claude
man.
is the best for coding, and then Gemini
Yeah.
is just the best overall as
Yeah.
an LLM.
Yep. You got it. Management also announced that PayPal will start to pay a modest dividend, with the company targeting a 10% payout ratio. What? Management
The percentage of their earnings paid out as a dividend.
Right, but does this mean?
It's not. It's not a 10% dividend. No.
No, I know that. I know that. But I
Okay.
wonder if this means they're gonna raise the dividend. Raise?
Most likely,
Right,
yeah.
raise.
Yeah.
We are pleased to see management reinforce its commitment to capital return, which we see as the right move now and in the long term. Business strategy and outlook. Wait, by the way, this report is written in October. Oh, well, that's not that far away anyway. Development papers
It's
that.
from the last quarter when they
Okay.
reported the last quarter.
Fair. When are they reporting soon? Right?
Soon, yeah. We're in earnings season right now, but this was the
15
first week.
days. Oh, I'm
Yeah.
buying before I'm doing. Bro, I just started the stream saying how I shouldn't do that.
Yeah, you
And
shouldn't do it.
okay. Well, you're already in the company anyway. PayPal's
Yeah,
development.
I don't have a choice.
PayPal's development of a network of merchants and consumers early in the evolution of e-commerce allowed the company to build and maintain an enviable competitive position within the online payments channel. Historically, PayPal's growth had been driven by the ongoing shift toward electronic payments and the rise of e-commerce, which the coronavirus pandemic temporarily accelerated. However, the company ran into headwinds as the positives from the pandemic reversed and new competition arose. Management has attempted to combat the pressure on top-line growth with a greater focus on cost control and product innovation, with the ultimate goal of shifting toward more profitable growth. Okay. Yeah, this is what we were talking about, being strong, not being aggressive. We see the evolution as the right move, but it will likely take some time to fully execute. Additionally, PayPal's online focus leaves it relatively exposed to a downturn in the economy. Okay. Yeah, because I guess because the private credit, or in general, right, a slower
Yeah, well,
economy.
discretionary purchases make up like pretty much the entirety of their business. You know what I mean? Like,
Yeah, that's
it
what they
makes sense.
say. Yeah, online purchases tend to be discretionary. If the macro picture changes for the worse, this could offset any underlying improvements in the near term. In the longer term, we see a mix of competitive opportunities and threats to create a fairly wide range of outcomes. PayPal remains a somewhat unique player within the payments space. We think this remains its key strength, but its position on both the merchant and consumer side could be challenged over the long run. On the merchant side, new online-focused acquirers have emerged. Acquirers. Why would you say that? Acquirers, I guess
Acquires
they acquire.
merchants.
Oh. Okay. And financial technology innovation also appears to be concentrated in the e-commerce space. On the consumer side, services such as Apple Pay represent competition for PayPal. Competition on both sides could chip away at PayPal's position. On the other hand, PayPal remains a preferred partner in the online space, and its Braintree business is becoming more profitable. In balance, we think the company can hold its own, but we recognize the potential to veer in either direction. An additional attraction is Venmo. Efforts to monetize the platform are still in the early stages. Venmo will likely not be a major driver anytime soon, but we believe it has the potential to create upside above our current fair value estimate. Bulls say there is still plenty of runway for growth in electronic payments. The scalable nature of the business should allow PayPal to improve its margins over time. PayPal's long-running experience in online payments is a unique asset that is becoming more valuable as e-commerce becomes a bigger piece of the pie. And these are the comps. PayPal, we have MasterCard and Visa considered overvalued, and Block fairly valued. All right. They have wider moats, though, MasterCard and Visa, which probably justifies.
Really?
According to that. You don't think so?
Yeah, they do.
Oh, okay. Okay.
Visa and MasterCard, like, are you kidding me? They're literally
Yeah. Okay, but that's why it's cheaper. Okay, price fair value. Yeah, price to sales of 2 for PayPal with 17 for Visa and Mastercard. Wow. Price to.
They had a 94 fair value when the thing closed at 70, and it's at like 58 right now.
Yeah. Oh, that's
56.
right. Right, it's not at 70 now. Right. No.
It's 55.
Yeah. Dividend yield, we don't care. Market cap, investment range. Okay. Bears say The separation between online and point-of-sale transactions is blurring, and PayPal may increasingly come into competition with larger companies in the future. Okay. Alipay and WeChat provide examples of how governments could favor local players, and this could shut PayPal out of a number of emerging market opportunities. Opportunities to monetize Venmo could be limited. Economic moat. Payment processing of any type is highly scalable, as once a payment platform is established, there is little incremental cost to additional transactions. If viewed through the lens of the acquiring industry, PayPal has material scale with over $1.7 trillion in annual volume, but falls short of the volumes handled by players such as Fiserv and WorldPay. So these people are a major player. However, the acquiring industry contains niches. Niches? A niche? Niches? And within the e-commerce space, PayPal is a clear leader, which we think places a narrow moat around PayPal's operations. However, PayPal's branded business is not really an acquirer. Its relatively unique model centers around a two-sided platform, with PayPal enjoying relationships with both merchants and consumers. We think this approach has material benefits and was instrumental in allowing PayPal to develop its current foothold in the industry. Having information on both sides of the transaction gives PayPal a meaningful edge in combating fraud, which was a very meaningful factor in the early days of the internet and remains a key issue. With an ability to combat fraud, PayPal was in a position to become a valued partner on both sides of a payment. Further, the relative ease of using PayPal in an online transaction materially boosts conversion rates, with PayPal transactions converting at a rate of almost 90%, compared with an industry average of about 50%. That's wow. But what does that mean exactly?
Yeah, I don't know what that means, yeah.
Yeah, does that mean that having PayPal as an option converts more, or once a person has chosen?
The fraud thing is the thing that I was talking to you about in the beginning with the escrow and all that kind of stuff. They offer like buyer's protection for everything, essentially. It's like, that's why a lot of people use it, but I don't know what this stuff means.
I think what this means is once people have chosen, like if people choose to pay with PayPal, the transactions end up working out 90% of the time, whereas in other cases there might be like returns, or because it wouldn't make sense to just say the conversion rate just for offering PayPal as an option, because then you wouldn't be able to measure that as much. Which is, I mean, that means exactly because they're offering a safer ecosystem, whatever transaction that ends up going through PayPal is gonna materialize. This highlights the ease of checkout for consumers and the attraction for merchants. Right, and again, this is a great marketing point for them when offering to merchants. They're like, look, if you have us, we'll convert 90% of the transactions. With these dynamics in place, PayPal was able to generate a network effect. We typically think of a network effect as a very strong source of advantage, and one that often gives rise to a wide moat. In PayPal's case, though, we think the effect is much more mild, as the company is a relatively small piece of the overall electronic payment infrastructure. We think PayPal will remain a preferred partner in the online world, given the relative convenience and security of its platform, but its market position is not so strong that the company can dictate terms to other players or gobble up increasing amounts of market share. Right, it's just Visa and MasterCard is too big.
It's just a good product, you know?
Yeah, it's a good product, but the market is too entrenched on the other ones. In our view, the limitations of the network effect are most apparent in the company's decision years ago to switch to neutrality in terms of payment choices. That is, to allow consumers to choose their method of funding as opposed to being defaulted to funding options that are more advantageous to PayPal. All right, quick pause. I'm going to go feed June. Be right back.
All right, I'm going to go take a piss and make a tea.
Hey, you back?
Mm-hmm.
I was just reading a bit of the transcript in the meantime. Bro, I was seeing some of the stuff, bro. The buybacks is 9% of their market cap. I don't want to.
I told you.
I know, I guess I didn't hear it. But wow, that's a lot. I was calculating too, like their dividend yield now will be about 1%. So they are going to quadruple their dividend. But yeah, just great. Okay, let's keep going.
You know what I mean?
You know what I mean? I'm seeing what you mean. Outside of its legacy PayPal business, we think its Braintree operations also benefit from a narrow moat due to scale-based cost advantages. While Braintree is smaller than competitors Stripe and Adyen, and volume growth is currently constrained by the shift by the shift toward more profitable business. It has grown quickly historically and looks to have carved out a position as a long-term leader. We think Venmo benefits from a network effect. However, moats in this area are somewhat speculative given the lack of profitability and uncertain long-term economics.
Wow, how dare they, bro?
Fair, no?
Nah, that's disrespectful, bro.
Given the limited
Anyway, carry
capital,
on.
given the limited capital needs of the business, historical returns on invested capital have been dramatically higher than any reasonable estimate of the cost of capital. Yeah, I mean, I've seen how
So
the
true.
return on equity has been better, return on invested capital has been better since the new CEO. He's just been improving all
Alex
financial
Kiss.
metrics. Yeah. Alex Chris. Our fair value estimate for PayPal is $94 per share, which equates to 16.3 times our projected 2026 adjusted earnings per share estimate.
Oh, you're still on the Morningstar?
Yeah, I thought we were bringing to the whole thing.
Yeah. Morningstar's the best, bro.
Yeah, they really do go hard. Without really, yeah, they don't get too much into the weeds, but they tell you enough.
Like, let me ask you.
Yeah.
There are no weeds. Let me ask you.
Okay.
When you were publishing research at Canaccord, was it more in depth than this, or
Yeah.
less in depth than this, or equally
Way
in depth
more.
as this?
But again, I mean, I was covering companies that we needed to get way deeper into qualitative stuff. But yeah, it's deeper. It's deeper. It's just deeper. It's just apart from the fact that we had to build a model, which I assume these people have, but they don't publish it. Is the fact that
There's a model there at the bottom.
yeah, but okay, let's see.
As you keep going, I'm pretty sure.
Okay, yeah. This is basically what we would do. Yeah. In terms of the model, yeah. But the fact that, like, for example, here, right? Like, if it's just imagine, like, you see here, I assume, like, they just talk a little about earnings, right? Growth, like what they expect. Whereas, for example, we would have like pages on pages about each one of their products, how it compares to other products in the industry, what did they do? Like, for example, it's like, I don't know, it's an infrastructure for observability of vulnerabilities within a cybersecurity environment. So then it's like, okay, what does it do? How does it help the customer? How does it compare to other ones? And then many of the companies that we cover were.
But what you're reading right now is just the summary. We're still on the summary portion of it.
Well, I'm going through them, but no, I don't think. I mean, from what I'm seeing, they're not. You see, like this. It's just like, it's like, how do I say it? This is like telling me about the company from a view, like a sky view of the company from different angles. It's not like now they're gonna be like, oh, Braintree is this, and then screenshots of what a PayPal customer sees in each one of the avenues of the product. You know what I'm saying?
Yeah, but that's because this is a note. This is like a update of a note, I think. No, it's not a report.
Oh, you're saying they have a full report somewhere?
Yeah.
I don't know. Yeah, I don't know. But yeah, I mean, I would assume that these people do the same level of quality research that we did, or even higher. It's just like the depth of these reports that I've read from Morningstar are always kind of like this. I haven't seen a full report that just goes like with, pictures and, like, I don't know.
Okay.
Yeah,
Gotcha.
but again, I wouldn't expect them to release that for free, like they do here.
It's not free. Schwab pays a lot of money for it.
Yeah, but you think
Like a lot of money for it.
Yeah? Okay.
Probably, yeah.
I don't know. Okay.
Billions.
Okay. Where are we here?
Millions, brother.
Trillions. Our fair
Or
value
billions,
okay, here we are. No, where were we? Yeah.
ChatGPT, make one just like this. Make no mistakes.
This is my portfolio. Make it go to 1 million. Make no mistakes. Growth started slow in 2022 as the company faced some headwinds. Near-term growth will likely remain tempered as the new management team works to reposition the company and focuses on only adding profitable business. And macroeconomic issues could create additional pressure. However, we think PayPal can generate solid growth over the long haul as it rides the secular shift toward electronic payments generally, and e-commerce and mobile payments more specifically. Our projections result in a 6% revenue compound annual growth rate over the next 5 years, with growth picking up in the back half of our projection period. Right, because right now, what are they growing at?
10%?
No,
Not even.
less, I would assume.
8%?
Like 2,
Not even.
3%?
No.
No. Let's
No,
see.
go to their income statement.
Yeah,
So
I'm here. All right, for the last
it's
year,
like 6.
31.8 divided by 29.7. 1%. No, I'm tripping. My bad. 7%. Sorry. I'm stupid. I read the 1.7. Whatever. I'm done.
6, 7.
6, 7. Oh, so then, yeah, I mean, they're in line with that. And the previous year is the same, right? About maybe even higher.
Yeah, probably higher.
29.7 divided by 27.5. 1. No, yeah. 8. Yeah. Okay. Right. So they expect it to continue to decelerate, but still be fine. But then they say with growth picking up in the back half of our projection period, so then they expect lower revenue growth in the more recent, so like 4, 5.
Yeah.
Margins came under pressure due to the loss of the high margin eBay relationship, but management more than offset this with sizable cost reductions over the past couple of years. With profitability now resting on a more stable base and gross profit now growing year over year, we think management's focus on more profitable business and the natural scalability of the business will allow for ongoing but modest margin improvement over time. We project operating margins adjusted to exclude the amortization expense will improve at an average annual rate of about 25 basis points over the next 5 years. Okay. We use a cost of equity of 9%. This is the required rate of return, right? Cost of equity?
Yeah. What they're using for their
That's high.
ETFs. No, it's low.
Yeah?
Yeah.
Okay. Low compared to what?
I mean, compared to mine.
Oh, okay. I was just thinking the S&P is like 7, right? No? I don't know. Risk and uncertainty. The payment processing industry is evolving, and it is possible that
more like 10, but yeah.
It is possible that new competition and future disruption could significantly reduce the profitability PayPal can generate or cut the company out altogether. As the company's revenue is directly tied to revenue, revenue at its merchant. Yeah, I don't know why I paused. To revenue at its merchant customers, and online spending tends to be relatively discretionary, right? The whole thing with the economy. PayPal is sensitive to macroeconomic conditions. PayPal's international operations present currency and execution risk. Okay, some governments have shown a preference for local payment processors, which could freeze PayPal out of certain markets.
Okay.
The ultimate economics of the Venmo business are difficult to predict. Just one line.
Yeah, Venmo. I mean, Venmo it's true though. It's one line. It's facts.
Yeah, it's just difficult to
how
predict.
do you monetize the fucking thing?
How do you monetize? Yeah, the bank, like what you say, it's just a bank.
Yeah, that's the only way. But that's like not Venmo, you know? That's like the only way. I think just ads. I would say just ads is the only way because I think they're referring to Venmo, the social media aspect of Venmo.
Mm-hmm.
And
okay.
like the peer-to-peer, and yeah, and I'm assuming they just mean like I mean, I guess you could just put ads on the feed.
Yeah, I mean, I guess. I don't know.
I mean, it makes sense. They have good data. I mean, if they have good data on do they actually? I don't know.
Also, I wonder if they can, if they don't run into regulations if they start using that data. But I think if you anonymize or whatever, you make it anonymous, you can do whatever you want really with the data. I don't know.
No, I was gonna say they have data, but it's actually they don't have data really.
No. Okay.
No, because they're not like. I was thinking that maybe like it would be cool if, for instance, Venmo could know what you're PayPaling, like what you're Venmoing somebody for. Like,
yeah.
Imagine like me and you went to a bar.
Yeah.
And I Venmo you for the beers. It would be nice to know if Venmo knew the bar we were at, but they don't. So it's like, yeah.
I mean, but that's one of those things that I'm like, they can kind of infer things like that if they combine it with other data, but that's where I don't know. If they provide that data
They
to
have the data of our like financial transactions amongst peers. That's good, kind of.
yeah, and I guess with AI, you could try to make some inference of the emojis, but
Yeah,
but
exactly.
but yeah, the location thing, you can do things like PayPal transact or Venmo transactions within New York City, but it's like yeah, within a neighborhood in New York City, but
That doesn't really give you anything.
yeah. Hmm. Yeah, apart from yeah. I'm trying for advertising. I mean, it could be like for advertising research, like what market to get into. But it's yeah, it's peer to peer. Like you never know the hell the money's about. Okay. We see the company's largest environmental, social, and governance risk as data security. Okay. Any company involved in processing payments has potential exposure to breaches in its systems. Okay. Our monitor uncertainty. Well, yeah, if they get hacked, that would be pretty bad for them. Our monitor uncertainty rating is high. That's wild. I mean, not super wild, but I wouldn't think high. However, this uncertainty is balanced, and we believe PayPal is as likely to materially outperform our long-term expectations as it is to underperform. Okay. But yeah,
No,
there's
W non sequitur.
no capital allocation. Our Morningstar capital allocation rating for PayPal is standard. In our opinion, the company's balance sheet is sound. Its capital investment decisions are fair, and its capital return strategy is appropriate. Okay. We think management's strategic choices and its acquisitions have generally been sound. Former CEO Dan
Nice.
Schulman joined eBay in 2014 and led PayPal following its spin-off in 2015. While we don't have any major... Wait, is this the guy that's still in the board of directors? I think so. The guy
Yeah,
that's
probably.
like, yeah, the Morgan Stanley investment banker. Well, we don't have... No, is it? But so the previous CEO is still in it? I don't think so. Let's see again. No, I think I'm getting it wrong, right? Nah, yeah, this is Chris Todoro. Okay. So this guy was with them though, because they joined around the same time. All right.
Keep going down.
All right. Oh, going down here? I don't think.
No.
No.
Hmm.
It wouldn't really make sense for the previous CEO to stay, but I don't know. While we don't have any major issues with Schulman's leadership, he made some significant mistakes, like buying Honey, right? And the company was entering a new phase. And as such, we think a change in management was the right move. Alex Chris took over as CEO in September 2023. Chris seems like a solid choice. He previously managed Intuit's small business and self-employed group, which accounts for most of that company's revenue. We believed it would be difficult to veer from the company's focus on improving margins and returning capital to shareholders, and we think that has largely proved correct. But we don't think Chris has simply stayed the course. We see his shift toward a stricter focus on only pursuing profitable growth as a good move. Within PayPal's management has historically successfully navigated the ongoing evolution of the electronic payments space to date, and its choices have helped build and maintain the narrow moat that surrounds the business. Okay. While PayPal has arguably simply been better placed for growth given its online focus, within management has done a good job exploiting the opportunities in front of the company and working to minimize competitive threats. Yeah, because that's the thing. It's like the whole thing, they just have too many competitors to be doing something aggressive, or that would be good for us if they became aggressive. We would point to a couple of factors to justify our favorable view. First, we think the switch to consumer funding choice was a savvy move. Consumer funding choice. And suggests management understands both the basis of the company's moat and its limitations. This move positioned PayPal as more of a partner to other players in the ecosystem and headed off competition that might have otherwise arisen. PayPal's agreement with Apple looks like another step along these lines. What is this? PayPal agreement with Apple. PayPal and Apple have a significant agreement where they integrate each other's payments products, allowing PayPal Venmo cards in Apple Wallet and Apple Pay acceptance within PayPal's platform. Okay. All right.
Cool.
Cool. Yeah, exactly. Like they just don't want to compete. They just want to just be there and not be left down. That said, the
Pretty
company's
cool.
growth has not been devoid of hiccups, as active account growth stalled starting 2022. Management noted that incentive programs during the pandemic to add accounts proved to have relatively poor economics, as accounts acquired through incentives tended to churn quickly. As a result, management has shifted investment to focus on engagement with existing accounts. Okay, yeah, that's good. While this switch makes strategic sense to us, we think this situation highlights the uncertainty that accompanies payables growth, right? Yeah, I mean, that really is the main thing that worries me about this company. It's like, I don't see any, like, what is it called, stickiness. Like, people can just switch easily, except for the merchants, like you were saying, which will be more sticky. But for
No, the
customers,
stickiness is in the safety of the transaction, bro. Like it feels safer.
but it doesn't matter anymore, really. Like, it's safe enough with any other, like any online payment that I make. It's pretty safe. Like with anything that I use, like even if I use a debit card, I use like a Revolut, like with the newer fintech banking. You know what I'm saying? Like I'm not like if you're still using older banking system stuff, okay, sure. But like with what's available now in fintech,
But I'm talking about for like peer to peer sales,
yeah,
from that aspect.
but then again, like for the peer-to-peer sale, now the providers of those peer-to-peer sale environments, like eBay, they do it themselves. So it's just like what's available is safe enough. That's what I'm like. I don't see how it's as important, the PayPal safety thing.
Yeah, it's not a big thing, but I think it does matter to some people.
Oh, it definitely matters. I mean, it's their core driver from the beginning. But yeah, I don't see it that sticky. Like I see how it can fade away, which is not so important. So the fact that they are focusing on providing better offerings, so better, yeah, a better product for the people that already have PayPal accounts or businesses that have PayPal accounts. I think that's the focus because it's a good focus because the security alone is not enough because everybody's pretty safe now online for payments. Since its spin-off, I think, but I don't know. I don't know how educated that guess is. Since spin-off, PayPal has been fairly active in terms of M&A. We like the iZettle deal, which is, yeah, we saw this, right? This was the point of sale, right? From a strategic perspective. Purchased for 2.2 billion, iZettle is a European company with a business model similar to Square. We think the addition of this company gives PayPal a solid platform to expand into card-present transactions. Right, this is great too, right? The fact that they're moving to physical stuff, a move we view as timely given the increasing convergence of online and brick and mortar acquiring. Among PayPal's other acquisitions, we would question Xoom, which was purchased for 900 million in 2015, some time ago. We see little strategic connection between PayPal's core business and international money transfer. Oh, that's what Xoom is. Okay. PayPal also acquired Honey for approximately $4 billion. This deal made strategic sense in our opinion, but the price tag was difficult to justify. On the whole, we don't think PayPal's acquisitions have been value creative. Given the greater focus on capital return, we don't expect any large acquisitions anytime soon. Okay, good. That's what we would expect. Analyst notes archive. So this is from July of 20. Well, yeah, a few months before. PayPal earnings. Oh, this is from the previous, from second quarter. Mixed. A review in our view, but the market appears to be focused on the lack of improvement in volume growth. Why it matters in terms of top line growth, PayPal largely maintained recent trends in the second quarter. Total payment volume was up 5% year over year on a constant currency basis. Yeah, so they have done better in the third quarter than they did on the second because they were like a 7 on a constant currency basis. With volumes up 5%, what were the volumes here? Because that's what the market cares about. Yeah, 7%. So they are also improving on volumes. Nice. So this could bode well for the next quarter. Did I skip? Wait. Oh, okay. Oh, these are all the previous ones. Oh, wow. Cool, cool. Where are we here? While consumer spending appears to be holding up overall, management noted that it saw some softness in areas affected by the new tariffs. Unbranded volume was up 2% in line with the previous quarter, and Braintree was flat. However, management noted that they will start to lap the culling. Again with this lap the culling. What is that, Macha?
Lap the culling.
Lap the culling, yeah, okay. What is lapping the calling? What is lapping?
Just means like it continued to call, like, and call means to like stop or like slow down.
Okay, maybe
You
just
get it?
without. No, I just don't know. I think I don't know what call means.
Call means to like slow down, to like ring in, like bring in. You know what I mean?
Slow down or bring
It's not
in? Wait, this is
slow
thinking
down.
of. Okay,
Slow
so
down,
calling is
like
slowing down, and then lapping is basically like it's happening again, like it's still slowing down kind of thing.
yeah,
Lap the calling.
exactly. Like it's like is it a farmer's term? It's like a term for like when your sheep are like all over the place and you call them, like you bring them in. You know what I mean?
I don't get it.
What do you mean you don't get it? It's just like
I
just
mean that I don't
stopping
get it.
something,
I don't
like
know. In this
stopping the
business,
bleeding
lap
or
the calling
slowing
means
it
that the
down.
company is reaching the 1 year anniversary of when they intentionally stop. Oh, they finished the lap, but remove to reduce unprofitable business. Okay. So they just getting to the end of the process, the lap of calling, which is reducing the Braintree's unprofitable volume. Okay, and now I get it. My bad. In the third quarter, and expect to return to growth. Okay, like they're finished with the unprofitable volume, and now that was the trout basically. Okay. PayPal has shifted to a focus on profitable growth and is emphasizing transaction margin dollar, essentially gross profit growth, which we see as the correct move. In the quarter, this metric was up 7% year over year, in line with the previous quarter. Excluding the impact of interest rates, growth improved slightly sequentially to 8%. The bottom line, we will maintain our 94. We believe the company maintains strong competitive position and management is on the right track. PayPal saw strong margin improvement in the quarter. We don't expect PayPal to maintain this rate of improvement. We think recent results highlight the scalable, but they did maintain it. Okay, nice. All right. That's earnings per share guidance by about 4%. Recent trends persist progress in shifting profitable growth. This is the previous quarter. This is the first quarter of the year. No major surprises. Shifting toward profitable growth, same thing. The line volume growth showed the company continued to execute on its strategy. Year-over-year volume was 4%. So yeah, so they went from 4 to 5 to now 7. So they are getting up. The adjusted figure was in line with growth last quarter, and they maintained the 94. They've had the fair value at 94 for a while. Trump tariffs could lead to negative impacts for payment names. While we see the direct impact of the tariffs proposed by Trump administration, this is in April of 25, on payment processors as limited, the indirect effects could be materially negative. Why it matters, we think the recently announced Trump tariffs could potentially have a material negative impact on consumer spending, which could create significant headwinds for the payments space in the near term. To the extent that the tariffs lead to inflation, there could be some offsetting positive impacts for the space, as revenues tied to the size of purchases in many cases. Okay. However, we think the negative effects, right? So they're just saying any effect, right? Any bad effect on the economy is going to be a bad effect on PayPal. But because the tariffs ended up being not bad for the economy, it wasn't bad for PayPal. PayPal new targets laid out at Investor Day. All in all, so Investor Day is February. Oh, so they're going to have Investor Day shortly after earnings. Oh, no, we see, which makes sense, right, for the year. We see little in PayPal's Investor Day to alter our view of the narrow mode company's prospects. Management outlined some new plans, such as unifying its platforms and improving its small merchant offerings. Nice, that's what we inferred from their executives. We think these ideas make basic sense, and it is important for companies like PayPal to consistently adjust their approach and adapt to changes in the payment landscape. But we don't see any of the new ideas unveiled at the Investor Day as dramatic shifts. And at this point, we believe execution of the company's current strategy is the primary consideration. We will maintain our 100. Oh, so they lowered it. 104. They also had 104. So they lowered that? No, they lowered it on the first quarter. PayPal's online focus leaves it relatively exposed to economic downturn, and we are lowering our fair value. Well, because of the tariffs, they lowered it. But then the tariffs didn't play out and they haven't raised it. So they might raise it. Okay. Yeah, we'll see. Probably at the end of this quarter, they'll see what to do with the price. The company's near-term targets are roughly in line with our expectations and management's previous communications, but management set out long-term targets that call for transaction margin dollar growth of 10% or greater and adjusted earnings per share growth of 20% or greater. I mean, from what they saw, from what we saw this past quarter, they expect earnings to be growing 14%, I think. 15 to 16% growth in EPS. But yeah, that's pretty damn good for a mature company like that. Well, mature. Additionally, the target of branded volume growth of 8 to 10% by 2027 is a bit ahead of our expectations, which they are getting there because they were 5, 6, 7, and then we'll see if this quarter they'll do 8. We are encouraged by management's willingness to establish such aggressive targets, and these levels are higher than those built into our model. However, we would like to see progress toward these goals before we adjust our long-term expectations. And this is last yearly earnings. Growth slows as management focuses on profitable business. Weak headline results as a cautious approach to 2025 guidance sparked a negative reaction from the market. Is that when we started seeing it going down? Like last?
Nah, it's been going down for a while.
Oh yeah.
I mean, it's been at a stable base for
But
a
I
while.
saw like a big peak. Oh here. Yeah, this is it. So no, yeah, well, oh yeah, they reported March. So yeah, when they lowered the guidance for the year, there was this boom. Yeah, that's the day of earnings. Yeah.
For what year?
For the fiscal year 2024, right? It's the year 2024. They reported the full year on this date. And they lowered the guidance for 2025. And that, boom, and then it recovered. And then I guess here they didn't do as much. Yeah, every time, I mean, in here, that was good. Anyway, yeah, that's what has caused the downturn. So then, if now in the earnings for the full year, they provide a good guidance for 2026, which I think makes sense if they are in line with how they've been doing better in volume and their goal of having 8 to 10% volume growth in 2027 or by 2027, we should see something good. I mean, we should see. It all points out to something like that. And that would be a good catalyst. That sounds like a catalyst. Because it's not, yeah. It kind of get lower. I mean, it can get lower, but with the way that the earnings are playing out, it seems like if they just look positive on the fiscal year, like the guidance for the next year, the price should go up. Because, for example, if we go here, where is it? Here? No, here. Yeah, in here, well, it's here when the run-up started, but this could be a different reason. Anyway, not much else I can read from that. Braintree volume was up only 2%, significant decline from 11% growth in the previous quarter, 14% growth for the full year. Management continues to call unprofitable business and expects, okay, but they're lapping that now. Negative impact on volume has aided transaction marginal dollar growth. We continue to be encouraged by the progress the company has made on this front and see this as the more important metric. Higher interest rates have been a tailwind for transaction margin dollars for this year due to interest on customer balances. This boosted transaction margin dollar growth by 2 percentage points, blah, blah, blah. All right. Yeah, okay. So I think we got the gist of what it is. They are doing profitable growth. This year, 2025, they lower the guidance, which has depressed the stock, but they are delivering on their goals and improving. And the market is not catching up with that yet because they're just not growing at a crazy rate, and people are worried that other companies are going to disrupt them. Yeah, okay. Mixed results as company becomes a more profitable business, right? This is from, yeah, this is just too far off. Yeah, margin improvement over time. Okay, what is this now? MasterCard, Visa, PayPal.
Yeah. So what do you think?
I think it's a buy, yeah.
Not too bad. Not too shabby.
Not too shabby. Yeah, and they just see the revenue growing by what we're seeing, 2 billion or so each year, and then accelerating to 3 billion. Okay, man.
Sorry. Just have some stuff in my throat.
Yeah, margin improvement.
Damn.
Yeah, as long as they don't do any weird acquisitions, which the CEO doesn't seem like he's gonna do something like that.
No, they're gonna just keep returning capital to shareholders, raising their dividend.
Yeah.
And then again, like if growth accelerates, it's only a positive, you know. But even if growth remains the same, then it's still good. You know what I mean?
I
Because again,
suppose
like 10 PE.
the concern is the same as the analyst has, which is if the economy slows down.
Yeah, but that's like a
No.
sinking tide or whatever situation.
Yeah, everybody would. Yeah, Mastercard and
It's like
Visa
at
will
that
also
point
say,
we're just cooked. You know what I mean?
"Wow."
Not me though, because I own bonds, but everybody else, the AI
Yeah,
circle jerk is
yeah,
finished.
that's finishing soon. Yeah. Well, soon is a strong word, maybe.
Yeah.
Finish at some point.
Mm,
Yum, 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 yum. So do you think they're gonna delever a little bit? Okay. I mean, I don't really know. Apart from this really would just be getting into the product, but I don't see how that really would make a difference. What is this? ESG.
Yeah, but what do you know, right?
Exactly. That's why it's like I feel like it's enough information and a good margin of safety. But what
Yeah,
do I know?
that's also my belief. I just think like any growth at this valuation with this kind of signaling from
Yeah.
management
Yeah.
is enough for me. You know what I mean?
Yeah. I can concur on that. All right, should we call it a day then for that?
Yeah.
Because we're near the 3-hour mark, and this would just close the PayPal video. All right, so this is
And
a
the
buy
TSSI video.
TSSI. Oh, TSSI. Yeah, so,
Yeah.
right. We did take that one out. All right, so let's put
The
this
freaking
guy.
dog shit company. We took TSSI out.
Yeah, we did. I gotta take it out of the portfolio tomorrow.
If I were to ask the guy that I know that Dell, that would be
Insider
he can't
trading, is
tell
that
me.
what you're saying?
He can't. No, I wouldn't. I don't think it would be insider trading, but like he's not allowed to tell me. So if he tells me
Uh-huh.
and I act on the information, actually, yeah, it would be insider
Yeah,
trading,
right.
wouldn't it?
I'm like, what are you talking about? But yeah, I mean, there's things off the record and on the record and all that. I mean, insider trading is
Like
like
he can't say he's technically like right, but
right.
him
He
as
can
like a
say, and you. I mean, you can't ask either. According, I mean, I don't know if that's just a CFA thing, or if that's a legal thing. But I think both parties are like, yeah, like it would be legal. Like, would it be? Yeah, it would be illegal for you to
I
ask.
can ask.
I don't think so.
I can ask.
I mean, again, he can tell you too, but I don't know how it
He
works.
he can't tell me. He's under an NDA.
Sure, but what I'm saying
I'm
is,
kind of curious at this point to know if he knows,
yeah, fair
right?
enough.
Because he might just be like he
Look,
might just not even know that
yeah,
he's in
I mean, he might
under an
not know. That's
NDA.
true, but oh, that he doesn't know he's an NDA. I mean,
Because
he's
he's
not.
just like a high level sales manager. He
Yeah,
doesn't really he's not like in operations.
but you don't need to be in an NDA for you to like prevent you from like they can sue him for what this had. It's different things. Even if he's not an NDA, they can sue him for company secrets without him being an NDA. Like, because he cannot just be divesting company information. And then the thing with the insider trading, it's just a matter of how information propagates. If he tells you something that the company hasn't publicly announced, even if he's allowed to tell, in the sense like he's not like on an NDA or anything, that is a different crime because that's a crime with the SEC. Not a crime against the company. It's not a civil suit at this point. It's a criminal suit. But my thing is like I think even if you asked and he refuses, like if he were to tell the SEC or somebody found out, I think that still makes you culpable. But I'm not sure about that. Like even if he doesn't tell you because you asked, but obviously none of this is relevant to an actual like nobody's gonna prosecute you for asking your friend. But
Also, like it's not even like they want to give us any type of
I don't
advantage.
know. I
So there's
don't
no
know. It's, yeah,
there's
I mean,
no
I feel like
point.
it's what you say. You just want to ask to see if he knows, kind of like to like scratch that itch. But we know that it's Dell. It seems like already some friends did tell other friends that it was Dell, and they published it. So it's
We
like
don't know.
okay, circumstantial evidence.
Yeah,
We don't know
we
anything.
don't know for a fact.
Yep. All right. Well, That's it for today, guys. Thank you for joining us on a very exciting episode. And I'll see you guys. We will see you next week. Anything for any tasks and quests
Woo.
for the audience, Seven?
Nope, take a break this week, guys.
Okay, you guys can take a break and see you.